Divided government means you're not going to get very strong action in terms of things like fiscal policy.
We like gridlock because it gives us certainty in a sense.
I do think that the midterm elections will just be a small blip in what we see in markets.
We're thinking about the midterms, we're thinking about inflation. But in the background, you have quantitative tightening.
Underlying growth and Chinese growth and European growth, these things have gotten worse.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures on the S&P down about 0.25%. TK, it's the red wave that never was.
It never was. It's absolutely fascinating. I'm going to go out on a limb here, John, and say the most interesting midterm election in the modern age as well. The results still coming in. We'll have them through the show as we get them from the different sources. But yeah, the wave, the ripple, the whatever, the answer is it is a divided America.
Potentially a narrow margin in the House, Lisa. We'll find out the results hopefully a little bit later on this morning, maybe into this afternoon, perhaps even days when it comes to the Senate. 4 seats now. It comes down to 4 races.
And this is unexpected, right? People, even on the Democratic side, were expecting for more of a sweep than what we saw. What does this mean? The takeaway to me really lies in Donald Trump and really the motley performance of some of the candidates that he backed, but also this question of the nuances of different regions. There is a disparate message being sent by different states, and that, I think, is a takeaway from what we saw last night.
You brought up the former president. Let's talk about the future race, because the campaign is going to start almost immediately, Tom.
Really?
Governor DeSantis down in Florida. Wow. What a margin, what a win early in the afternoon, early in the evening.
Without question, the win of the year. I loved, I heard this over, and I think it was CNN. You got to go back to Reconstruction after the American Civil War, John, not the English Civil War. You got to go back to Reconstruction, where a Democrat wasn't part of the party down in Florida. It was a stunning across-state victory and sets him up to rebut next week. Is it next week or even this week? We may hear from
November 15th,
President Trump.
I think it is. Yeah. Lisa, what did he say yesterday, the former president? If they win, he gets the credit.
Right.
And if they lose, he doesn't get the blame.
Yeah, so
that's the rules.
We're going to have to follow that today.
That's
what
okay.
we're doing, just
Good
to
to
let you know. You know, whether he can message this in a positive spin kind of begets the point, or really is not the point, because we're looking at a situation where people don't want to align with him as much. And to your point, John, Ron DeSantis is going to run. And basically, he got a full green light to do so from the electorate yesterday.
Let's whip through the price action just briefly on the S&P 500. 3 days of gains coming into these results. Friday, Monday, Tuesday. Will it continue this Wednesday? Equity futures down 0.2%. Yields just a little bit higher. No real drama here, Bramo. Yields up a basis point. Your 10-year, 4.1342. Euro dollar negative 0.2%. Just about hugging parity. And crude back in the 80s. We're down 0.7% at $88 and let's call it 30 cents.
That's interesting, especially because some of the rhetoric from analysts after the election, or as we got the results, was that the one area where Republicans and Democrats might be able to come together would actually be on energy policy, because there's more agreement that no one likes high gas prices. Today, it's a little bit quiet on the economic front ahead of that inflation print tomorrow. We do get Fed speak, because why not? We get Richmond Fed President Tom Barkin at about 11 a.m. Eastern, Minneapolis Fed President Neil Kashkari speaking at 8 p.m. It's going to get more difficult. It was clear in all of the exit polls, people are very concerned about the economy and about inflation. That was a huge issue. How do they really dovetail the fear of unemployment increasing as time goes on and we head into some sort of downturn? I know I do this, but I'm going to just have to. There is $35 billion of 10-year auction done.
I thought you were going to say somebody won the Powerball.
Actually, someone did win their Powerball, but I won't give that update. The reason why I find this interesting is longer term. Does the results from this election matter in terms of the longer-term inflation outlook? We heard overnight the New York Fed president coming out, John Williams, and saying longer-term inflation expectations have actually remained really under control. HSBC talking about a 2% 10-year yield at the end of next year. How much do we start to see that bleed into the outlook in auctions?
John, to get the debate started before we go to our victims who have to get up early with us, John, are we more gridlocky right now than we were 24 hours ago? I think we're more
with regards to what, Tom?
The nation, the politics.
Sure.
I think it's tighter. It's polarized more.
Well, I would argue that it's less gridlocky than some people had expected, right? That they had expected the president and then there to be this overwhelming red wave that came in and flooded the scene. Wow, that face that you just made at me means that you've got something incredible to say. Go on.
I don't know. I think it's going to be fascinating. We've got a lot of people to talk to today about this as the results still come in. It's by no means decided.
There also are earnings, and I want to just mention this. And this in particular because of FTX.com and this blow up of what happened in
You're doing
in
BitDog
Bitcoin.
on the day after the election.
No, I'm talking about the idea that earnings are still a motley picture as well. And you're seeing some of the high flyers come down pretty dramatically. Beyond Meat, Wynn Resorts, reporting
Is
after
there a little
the
bit of John American political sarcasm there? We're doing the election mop-up and leading with Beyond Meat.
Is gridlocky a word?
It is.
That's the word.
It's in merriment.
Okay, thank you. We appreciate it, Lisa, as always. Bloomberg's Katie Lyons joins us now in Philadelphia. Anne-Marie Hordern with us down here in Washington, D.C. AMH, let's start with you. It's the red wave that never was, and these margins are much, much tighter than many people anticipated.
Yeah, that's right. It was either going to be a ripple, a wave, or a tsunami. I think the only person who can claim a tsunami is what you said earlier, Jonathan, and that's Governor Ron DeSantis in Florida. We should note, I was looking back at his speech last night, and the crowd said 2 more years. Governors in the United States serve 4-year terms, so they are clearly behind him to go for 2024. But we have to remember, we're still waiting on votes to be counted. A lot of that will resume at 9 a.m. Eastern, and really for the Senate, it comes down to key races: Arizona, Nevada, Wisconsin, and of course, Georgia, which at this moment could end up being what it all comes down to, and that's a runoff in December. So we might not know for weeks.
Anne-Marie, tell me about President Trump and what his path is here. He's got to manage the message to get to, I believe, November 15th. What would you expect to hear from him and his supporters?
He is clearly worried because what the Wall Street Journal was reporting yesterday and the New York Times was reporting yesterday is that he said, sure, Ron DeSantis, he can run if he wants to run. But, I have some information I can leak about him that he's not going to like. So clearly Trump already feels like he is on the back foot of Mr. DeSantis in Florida, who, by the way, it really was a tsunami. He won Miami-Dade County. This is a county that Biden held by tens of thousands of votes.
Is there any larger takeaway, though? And I was talking about how each different state is a different story in terms of what the electorate was really sending in terms of a message. With respect to Florida, what is the message being sent with the fact that Miami-Dade is actually turning Republican so decisively for the first time, I believe, in decades?
Yeah, and what the Wall Street Journal opinion piece has is that, and this is what Ron DeSantis leaned into in his victory speech, really had to do with the pandemic. I was able to keep schools open. I was able to keep businesses functioning. Your life continued, and look where we are now as a country. The rest of the country has followed what he would say in Florida's lead, although we should note that during that time was very, very controversial.
What a margin, ATK, to look at that.
Huge.
20 points.
Huge.
If there was a proxy war yesterday over the last month for the former president and the current president, it was in Pennsylvania. And Katie Lyons, that was between Oz and Fetterman.
Yeah, this was an incredibly tight race coming into Election Day, and ultimately the Democrat John Fetterman did indeed pull it off. About 93% of votes have been counted here in Pennsylvania, and he held more than 50%, about 3 points ahead of Dr. Mehmet Oz. The reason why Pennsylvania is such a bellwether state is because it is emblematic of the idea of liberal metropolitan areas and then rural counties in the rest of the state. That is true in the east and west here with Philadelphia and Pittsburgh and red counties pretty much everywhere else. But Fetterman was indeed able to flip this Senate seat. This is why this race is so crucial. This was a Republican seat, that of retiring Senator Pat Toomey. So the flip for the Democrats here could be huge. And to the conversation you were just having about 2024, the influence of President Trump, Oz was endorsed by Trump, as was the gubernatorial Republican candidate Doug Mastriano, who lost his race to Democratic, now Governor-elect Josh Shapiro by an even wider margin. So clearly, the connection with Trump didn't help them there. And this also is going to raise a question of acceptance of results and concession, because neither of the Republican candidates have actually conceded their races yet, even though they have been called. And beforehand, you had Mastriano, for example, casting doubt on the integrity of the vote here.
Well, that's where I wanted to go. Kaylee, you're in the cold before Independence Hall on the day after the election. To me, what I found fascinating was the importance of pre-election, of early voting. What have you learned in Pennsylvania about this rapidity, this speed with which we're getting to the importance of early voting?
Well, it definitely was huge here. And I should say that election officials really downplayed the idea that we could have a result this early because of the quantity of mail-in ballots, which couldn't start getting counted until 7 a.m. on Election Day. But we heard from the Secretary of State, the acting Secretary of State, Lee Chapman, last night, who said 1.2 million mail-in ballots were turned in. Just to give you an idea of how partisan those were, nearly 1 million were from registered Democrats. Only 303,000 were from registered Republicans. So a huge Democratic tilt when it comes to the mail-in vote. Another thing I would say is that there were more than 500,000 ballots cast prior to the televised debate 2 weeks ago between Oz and Fetterman, and the debate really one of the catalysts for seeing the tightening of the race leading up to Election Day, because it showed Fetterman is still struggling from the effects of his stroke back in May. But there were already a significant amount of votes cast prior to that debate, so that could have been something of a saving grace for Fetterman in this race.
Katie, thank you. Wonderful work over the last couple of days in Philadelphia. AMH, just briefly, there's going to be an ongoing conversation about candidate quality and the candidates that got the nod from the former president and those that missed out. I'm thinking about McCormick. It could have been McCormick instead of Oz in Pennsylvania. Where do we stand on that? Putting all the races together last night.
I think we still have to wait, right? Because Herschel Walker was also someone that the former president backed. We still don't know yet, even though he's trailing at the moment. But then at the same time, you have J.D. Vance, which was able to maintain.
But do you assume a runoff in Georgia?
At this moment, I would assume that. But again, we really don't know. We have to wait for all of the votes to be counted. But that's what it's looking like. And it may all come down to Georgia in the end.
Anne-Marie, with us all morning. TK. Not the race people expected, in markets anyway. I think markets were ready to move on from this and get ready for CPI tomorrow and do it quickly, Bramo.
Yeah, well, you're not going to move on until maybe December. Is that what we learned?
4 more weeks, maybe.
Maybe.
If AMH is right and Georgia goes to a runoff. Mandy Zoo's going to come up very shortly on this programme from Credit Suisse in the next hour. Looking forward to that. Futures right now down 0.2% on the S&P. From Washington, D.C., this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. American voters have delivered a mixed verdict in midterm elections. Republicans are headed toward control of the House of Representatives, but by smaller margins than were forecast. And the Senate is still up for grabs. Democrats scored a big win in Pennsylvania, where John Fetterman was elected to the U.S. Senate over Republican TV celebrity Mehmet Oz. In one more highly contested races, J.D. Vance turned back Democrat Tim Ryan to keep an Ohio Senate seat in Republican hands. The Georgia Senate race was too close to call. Democratic incumbent Raphael Warnock and Republican Herschel Walker may be headed toward a runoff. In the UK, one of Prime Minister Rishi Sunak's close allies has resigned from the cabinet. Senior Minister Gavin Williamson quit over bullying allegations. Williamson had a reputation as a formidable behind-the-scenes operator. He had already been forced to resign from previous governments twice before. North Korea has fired another ballistic missile, adding to speculation that it may be preparing for its first nuclear test in 5 years. South Korea said the missile was launched toward waters off North Korea's east coast. Last Wednesday, Kim Jong-un's regime fired off 23 missiles, its biggest one-day barrage ever. And Disney is looking to cut costs after reporting results that fell short of expectations. The numbers also wiped out about $15 billion in market value. Losses in Disney's direct-to-consumer arm more than doubled in the fiscal fourth quarter, driven by the Disney Plus streaming service. Meanwhile, profit at the company's theme parks also fell short. Facebook's parent, Meta Platforms, has confirmed it will cut 13% of its staff. The company will also extend a hiring freeze through the first quarter. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
Inflation is clearly far above a long-term goal. Communicating that that is our goal and that that is, our North Star that we are heading to, and how we plan to, do that and how we see the economy evolving is extremely important.
John Williams there, the New York Fed president from Washington, D.C. Here's the price action for you on the S&P 500. After the vote, The results still coming through. Equity futures totally unchanged on the S&P after a 3-day winning streak on the S&P 500. Yields going nowhere on a 10-year, 4.1321. One stock to watch. It's Meta. How about this for a quote from Mark Zuckerberg? He takes full responsibility for lower revenue, and they are cutting, and they are cutting hard. We're talking about slashing 11,000 jobs across the company, Tom. The stock is up by 3.4%.
You said it clearly. Their pressers did not. This touchy-feely baloney about teams, they don't have teams. They're cutting employees. That's what they're doing.
They are real cuts.
You can do this like
well.
Silicon Valley massage.
Sure.
Lisa, you had the numbers on the break. They can do Silicon Valley massage. Baloney. It's not teams. It's people's livelihoods.
13% of the entire staff of their company, and this is the biggest Silicon Valley cut that we've seen so far, which is interesting because we see them accelerating. This is interesting also from Mark Zuckerberg, saying that he believed pandemic-related e-commerce surge as well as the outside revenue growth would be a permanent acceleration. How many other companies also assumed that this would be a permanent shift, and it was not?
So excess of the last few years, the question I keep asking, are we unwinding the excess of the last 2 years or the last 10? Which one is it? Because that's a very, very different story.
It's a great question, which is the reason why I pointed to some of those names after the market that are going to be reporting earnings, because there are a number of companies, Rivian, that have really benefited over the past 10 years of a shift in certain ways. And how much are we unwinding what we've just seen?
Tom, Meta in the pre-market up a little more than 3%.
Let's call it a bounce here. Again, we're continuing to look for results here in the Senate and in the House in America. The Associated Press does the best job on exit polls. The Wall Street Journal's got it in real time, which is fascinating. Which best describes your family's financial situation? Falling behind. Democrats 34%, Republicans a big majority 62%. That's a good lead into David Kelly, Chief Global Strategist at JP Morgan Asset Management. So let's dovetail this into tomorrow's inflation report, David Kelly. When does inflation ebb away to help the 62% of Republicans who say they're falling behind?
I think inflation has already peaked. I think it is going to gradually fall. We're looking for a 6/10 or maybe even 7/10 tomorrow because of a rebound in energy. But on a year-over-year basis, we might be down to a 7.9 or an 8. And by March, I think we're going to be down to something with a 5 handle on a year-over-year basis. So inflation is falling. But to your point, nobody's going to notice, because if you look at political leaning in this country, it really determines how people feel about the economy. People are, Republicans always feel worse about the economy when there's a Democrat in the White House, and vice versa. 75% of Americans believe the economy is in recession, even though if you talk to any economist, they will tell you, well, that's not actually true right now. Might be next year, but it's not true right now. So how people feel about the economy and what it actually is doing are two completely separate things.
Right. David, among the wealthy and among the haves, in decidedly a broad part of America that are have-nots, they've got to recover from a bear market, this inflation, and a decided bear market in bonds. What's your 2023 strategy to begin a financial recovery?
Well, I mean, it's certainly people are being, have been hurt by the rise in prices we've seen, and also, fiscal drag. I mean, things have slowed down a lot, so there's a lot of hurt out there in Main Street. For investors, though, the most important thing that happened this year isn't inflation, it isn't fiscal drag, it's the fact that prices fell. Prices fell for bonds, prices fell for stocks. So we're just putting out our long-term capital market assumptions. We just released them yesterday. And we're looking for about an 8% long-term gain out of equities in the US, more than 10% in Europe, emerging markets, and Japan. So I'd say this is a time to be overweight equities for a long-term investor. I think bonds are back. I think it makes sense to have a slightly below average allocation, but a pretty strong allocation to fixed income. So this is a time to get invested. I know people feel miserable, but as I said, there's a difference between what's actually going on, the economic dynamics, and what people feel given the extraordinarily partisan nature of news coverage in this country.
David, do you think that there is anything in tomorrow's CPI report from the United States that could change your assessment to go long bonds, to go long equities?
Well, I'll be looking at service sector inflation outside of the housing market. So if we see a big bump in things like inflation at restaurants, inflation in food in general, in a lot of household services. That would worry me a little bit. But I think we're looking at all these numbers, and what they're telling us is that outside of shelter, inflation is gradually falling here. So that makes it's very hard for me to be positive on or to worry about bonds that much. And the one other thing, the one thing that's coming out of this election is there will be no fiscal stimulus before 2025. So at some stage, if this economy weakens or falls into recession, the only game in town will be the Federal Reserve cutting interest rates to stimulate the economy. And I think that's the big takeaway from gridlock is gridlock means a more dovish Fed down the road.
If they choose to cut, if they choose to turn dovish, and this is going to be the big debate through next year. David, thank you so much, sir. As always, David Kelly at JP Morgan Asset Management. That's the debate we've been having over the last couple of weeks on this program. Overwhelmingly, it was seen by Wall Street that gridlock was positive for equity markets. But Lisa, you and I have both said it. It might seem that way now. That might be the optimal policy stance right now in 12 months' time. If the economy's rolling over and the Fed's determined just to keep rates unchanged, I think we'll have a very different perspective on that conversation.
What's the response mechanism to stagflation, both with respect to monetary policy and fiscal stimulus, especially because so many people point the finger at certain fiscal stimulus exacerbating the inflation that we have right now? That I think people don't have a handle on.
The Associated Press poll, and I don't have the numbers in front of me, but they made very clear a large part of America is worried about getting the next job. And there's, again, this polarization, and David Brooks said it beautifully in the New York Times. There's a wealthy, educated, elite Democrat group as a generalization, and a rural, non-college Republican as a generalization, and that's the gross polarity we're seeing. And the economic data we talk about each and every day is not just about the Dow Jones Industrial Average, it's about people's paychecks.
You always smile when you say it.
I'm just trying to wake you up, John.
Exactly what he's doing.
The quote of the morning is from Evercore. This looks at best like a red ripple, and if Democrats hang on to Senate control and eke out close wins in some more House toss-ups, it could ultimately look more like purple haze. Tom, purple haze. For Kevin McCarthy, I'll extend this one. Is it purple?
Queen, wasn't it?
Is it purple rain this morning?
Stop. Jimi Hendrix. You
know
that.
James Hendrix. Oh, okay.
You knew that.
Yeah. Okay.
He's going to be doing it the whole rest of the time.
I can't wait. Your equity market this Wednesday morning. Good morning. Trying to stage some kind of a comeback and erase the morning losses. We're almost unchanged on the S&P 500. Into the bond market, 2s, 10s and 30s shaping up as follows. Yields just a little bit higher at the front end on a 2-year 466, on a 10-year 413. And if you check out the FX market briefly, euro dollar looks a little something like this on a euro, just north of parity, 10059. If you want a single name, it's Meta. Meta in the pre-market rallying higher, positive by 4 percentage points now as the Facebook chief executive officer, Mark Zuckerberg, comes out and apologizes, Tom, takes the blame for the revenue shortfall and, dare I say, the spending largesse of
Was it the name change? Facebook to Meta? Can we go there?
Well, Tom, on a serious note, the shift of emphasis at that company towards the metaverse and the amount of spending that's come with it has been the focal point of the earnings that came out in late October. You remember the session, October 26th, when that stock was down by more than 20% in a single session off the back of spending too much money, way too much money. And can he retain any credibility with investors, or rather, can he reclaim some credibility with investors after making a monster move this morning to slash 11,000 people from the workforce?
Lisa, you followed this better than me and John. What do you think here?
I think that this highlights how much you're seeing a retracement of what is some of the tech darlings that we've seen blown up over the past 10 years. How much, though, is Meta unique, right? Because Facebook is the next MySpace, as some people say. Or is this something that is endemic?
I don't remember MySpace, Lisa. You only do because your father was on MySpace. MySpace was a few years ago.
I'm going to leave that there. I'll let him call in.
I used to look at it on the screen of the little tiny, whatever it was called, Macintosh, and go, you're kidding me. Really? That went down in flames. What we're going to do here is continue to follow this election. Right now, John, I see 172 Democrats, 197 Republicans in a House divided. We'll stay on that. Anne Marie Horton scheduled to be with us often through the morning. Right now, we dive to tomorrow morning at 8:30 and an incredibly important inflation report. We do this as measurement of the deepest market, foreign exchange. Ibrahim Rabari joins us, Chief Currency Strategist at Citigroup. Inflation, I get disinflation. Ibrahim, what will that do to the resilient dollar?
Well, we think it's a key driver for the dollar and for broader markets as it's been all year. And we've seen this really big shift in sentiment on the dollar relative to last week, even between Thursday and Friday of last week. And all eyes are now on tomorrow's reading. Our economists have a slightly lower forecast than the consensus, something like a 0.4 month-on-month increase in core CPI after 2.6s, about a tenth below the consensus forecast. If that was to pass, we think that recent dollar sell-off has further to go. So we've had 2.5%.
Right.
We think that you can get another 2% or so down in the dollar as global.
Ibrahim, frame it around a major pair. Let's take euro dollar. I mean, yen is its own beast right now. But on euro dollar, is it a big figure move if we get a disinflation in America? How many parts of the euro will go through parity and up 101, 102, 105?
Absolutely. So as you just highlighted, we're hanging above parity again, and we think that if we get a low inflation number tomorrow, we will easily pass through 101. But I think 104 is probably the next place to focus in that scenario. So really quite a different picture from where we were last week, and it's reflecting a little bit more China optimism. Again, the idea that maybe the Fed can take the foot off the gas pedal, but really also the luxury of looking into next year and sort of allowing investors, we heard this from David Kelly just now, allowing investors to maybe see a little bit more downside risk in the dollar over time as the global economy normalizes. And we think that's premature, but nevertheless, I think that will be the theme if we get low inflation tomorrow.
Ibrahim, let's get in the weeds just a little bit. I'm not convinced that the end of hiking is the same as the end of tightening. And the reason I say that is because even if they end hiking interest rates and they pause, but the economy rolls over and they don't do anything, Ibrahim, isn't the Fed still tightening in that environment? Isn't that ultimately the story when you really think about it?
Absolutely. We are exactly on the same page. And that's particularly relevant for the equity market. Usually you have these two phases of the bear market. The first one is monetary policy is tightening and you get the derating. The second is earnings compress, and we get more and more signs of that. And you see the continuation, usually the majority of the bear market, and that's very much our expectation. Now, when it comes to FX and rates, you also have two stages. And the first stage is when do global rates peak or U.S. rates peak, and that's usually around the time of the last Fed rate hike. So I think that last Fed rate hike does have importance for rates markets. Usually also is a tradable dollar correction. But it's usually not the dollar turn. That comes much later when you see a turnaround, a bottoming in growth expectations.
Is that source for the dollar turn abroad then, and not domestic?
It's a very good question, and I think right now we may think so. Again, we think it's premature, but the focus has of late been maybe some expectation of an easing of restrictions. It's not really reopening, but a gradual easing of restrictions and a bottoming of sentiment around China. There is maybe a little bit of hope that some of the market concerns around conflict-related tensions could also abate over time. So I do think that when it comes to the durable turn, the emphasis will be outside of the U.S. When it comes to the tightening, the Fed is obviously the most important factor globally.
Just to underscore the point that you just made, Ibrahim, are you saying that this election at gridlock, it does not do anything one way or another to the dollar, and that ultimately it has to be the drivers of the Fed, but more so even the stockpiles of natural gas over in Europe?
Yes, generally, I would agree. We think that inflation, broader risk sentiment, global growth are far more important drivers of the dollar than this specific or even more generally political considerations in the U.S. Historically, the dollar did appreciate post-midterm elections into year end. It is a risk premium for U.S. assets that tends to dissolve. You do tend to see an equity price increase as well. But we don't think we'll see a particularly decisive outcome. And this year isn't like most. We have much bigger developments in the macro landscape outside of U.S. politics. And again, inflation is probably the first and global growth the second. So we don't think that there'll be durable implications from the midterm elections, even when we know the full results. And we are, of course, waiting for some important ones.
Ibrahim, we were speaking with Mark McCormick of TD Securities yesterday, and he was talking about the same thing that you were, some of the rumors of China perhaps reopening that have just been that, rumors, right, that have not really come to fruition in any meaningful way. He was saying that if there is some sort of material reopening, you could see a 5 to 6% weakening in the dollar through year end, and even more through the remainder of 2023. How likely do you see that scenario? And in the off chance that it happens, do you see a commensurate type of weakening?
So we don't expect a breakthrough in reopening into year end, and even seasonally that would be hard to imagine. That being said, I think that idea that investors position for next year, and generally speaking, particularly longer term investors, would like to be exposed to cheap assets and maybe high carrying assets. So from both of those perspectives, the dollar doesn't look as attractive as it has all year. So if inflation and the Fed allow investors to position in that way, then we could see again a continuation, and maybe not 5 or 6%, but at least the 2 or 3 that I mentioned could follow from a soft CPI reading. But I do also want to emphasize what we've seen over the last week, particularly with China-related assets, wasn't so much counting on a big reopening in the short term. It was pricing out some of the extreme pessimism that we'd seen, and when it comes to China specifically, obviously the big asset price declines that followed the latest China Party Congress. And that's a bigger theme across markets. Big risk reduction away from the big themes that we saw this year. And that was obviously dollar strength. It was a decline in equity markets. But even in rates markets, we've seen rates volatility come down, and at the margin rates come down over the last 2 days. So it's mostly risk reduction so far.
Ibrahim, thanks for being with us today. Ibrahim Rakbari there of Citi. Looking ahead to the Fed speak a little bit later. Barkin of Richmond.
What do you think?
You have Kashkari of Minneapolis. We haven't seen a major split just yet. I did wonder whether we'd see a split off the back of what looked like a dovish statement and then a hawkish news conference.
And maybe Kashkari of Minnesota is somewhat controversial, could drive that forward.
Well, he's turned more hawkish over the last 12 months, that's for sure. Maybe he leans into the news conference a little bit more. But, Bramo, that's what I was waiting for, to see if someone was there saying, yeah, I agreed with maybe the news conference, but not the statement, or rather the statement and not the news conference, and see if we have that kind of thing. But I haven't seen that at all over the last few days.
I can't imagine that they would, especially because you've seen a loosening in financial conditions, right? I mean, you are not seeing the same type of concern bleeding through markets that they're going to over-tighten. That conversation's over, even though we have a 5.1% terminal rate being priced in. Well, no, but that's what the feeling in markets is, that the Fed's next sort of
Do you see that in high
shift.
yield?
Yeah, you've seen an incredible rally in high yield over the past couple of weeks. We've seen that in stocks. We've seen a weaker dollar. We've seen rates kind of become more stable. This all is not screaming fear. So why would the Fed back away from some of the hawkishness of that statement?
We're at the mercy of the next 2 CPI prints, and I say the next 2 because tomorrow's isn't the last one before the Federal Reserve meets. You get one right before the Fed meeting in December. So we've got 2 to go until you get to the December meeting.
I'm uninformed as usual. At the December meeting, do we get new forecasts and a dot plot?
You get the SEP, the projections.
The SEP.
Summary of economic projections from the Federal Reserve.
I don't read. It's like the beige book.
That will be in December. And basically, you had a guide towards what will be in the SEP from Chairman Powell in the news conference. And I think we're all surprised to hear it, because the September SEP bumped up the 23 dot by quite a lot. My memory serves me well. I think it was from 380 to 460. And now we're expecting maybe a 5 handle on that 23 dot from this Fed.
That's fully priced. If that comes in, people will just see that as having already been dictated by what we heard from Fed Chair Jay Powell. That's the most interesting thing about the rhetoric that we're hearing from analysts and what we're seeing from the market. They're basically saying, okay, we know it's coming from the Fed. We've priced it in. They're going to have to drop rates later next year. Kumbaya, let's get going. And this is not perhaps what they want to be seeing.
I'm not sure anyone at the Fed's saying kumbaya right now, are they? You think they're saying kumbaya? You know, when you hold hands and sing kumbaya? Like that.
Kumbaya.
It's okay. Do I have to do this?
What are we doing?
Why are we doing this? Let's head to break.
Meta up by 3.5%. Coming up, Henrietta Trays of Vader Partners from Washington. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The Republican wave in midterm elections that was supposed to undo the Biden presidency didn't arrive. It appears the GOP is likely to win the House of Representatives, but the majority will be smaller than expected, and Democrats could still retain the Senate. Democrats scored a big win in Pennsylvania, where John Fetterman was elected to the U.S. Senate over Republican TV celebrity Mehmet Oz. In one of the more highly contested races, J.D. Vance turned back Democrat Tim Ryan to keep an Ohio Senate seat in Republican hands. The Georgia Senate race was too close to call. Democratic incumbent Raphael Warnock and Republican Herschel Walker may be headed toward a runoff. Russian diplomats, they're trying to dial back fears that the Kremlin might use nuclear weapons against Ukraine. In a note circulating among IAEA diplomats, they say that nuclear weapons would be used only if the existence of the country was at stake. Meanwhile, the U.S. and Russia are preparing to resume nuclear arms negotiations within the coming weeks. Massive job cuts are set to begin at Facebook parent Meta Platforms. CEO Mark Zuckerberg says the company will cut more than 11,000 jobs. That's a 13% reduction in staff. It's the first major round of layoffs in Meta's history. Meta is cutting costs following several quarters of disappointing earnings and a slide in revenue. And cryptocurrencies extended declines as doubts grow over Binance's possible takeover of rival exchange FTX, which suffered a liquidity crunch. Bitcoin fell as much as 5.4% on Wednesday after a near 10% drop a day earlier. Ether, Polkadot, Avalanche, Solana, and Dogecoin also slumped. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
The American people are ready for a majority that will offer a new direction, that will put America back on track. Republicans are ready to deliver it. It's a new direction towards an economy that is strong, where you can fill up your tank, feed your family, where your paychecks grow and not shrink.
That majority is not guaranteed, and the party that Kevin McCarthy was looking to host last night did not materialize. Equity futures this morning, following the midterms, just about unchanged on the S&P 500. Maybe the sound of the night. Governor DeSantis, Florida. Did you see what his fans were chanting?
No, I know about it, but please explain it.
2 more years. 2 more years.
Yeah.
And of course, the full term is not 2 years. It's just 2 years
But
until
that
2024.
was early in the evening, and there was a collective shock among the fancy people.
20-point margin.
Yeah.
Absolutely crushing.
And it was across the state, and he took Miami-Dade County, which I hadn't even framed as a possibility.
You'd mentioned that, and over the last couple of days, we talked about the prospect of the former President Donald Trump making another run at things.
Right.
And maybe announcing that on November 15th. And I sat here and said, well, maybe the most unhappiest man in America right now is Governor DeSantis as he wakes up to that news. I think after the results of last night, Tom, I think he comes out of this one shining.
I think a January trip of the team surveillance to Miami
Florida,
to
sure.
do some research on this is important.
Good research to be had.
Let's drive it forward. I'm going to do this through the show today, even as we look to inflation tomorrow, and of course what we see in economics, finance, and investment on this global day. We go to Washington. Henrietta Trey's Director of Economic Policy, Veda Partners, has helped so much in the recent days. Henrietta, we all have our individual statistic. Mine comes from the wonderful Associated Press exit poll surveys that they do, the depth of it, that in Florida, Latinos voted 52% for the GOP. Is the Latino expansion happening much, much quicker than anybody believed?
Good morning. Thanks for having me. I think that in Florida, you're seeing that expansion, but it's not necessarily the case elsewhere. I would point to Arizona and Nevada as two states that also have sizable Latino populations that are not mirroring that trend right now. So I think it's isolated, worth considering basically that every Republican on the East Coast moved to Florida over COVID, and that's what you're seeing right now. Very positive for DeSantis, very positive for Rubio, but not necessarily for Republicans elsewhere.
What does your capital look like a month from now? Well, even 2 months. Let's go out past the lame duck session. What does the Washington you know so well look like?
They're going to be tired because the lame duck is going to be insane, is my expectation. Now that Republicans have not won in a red wave, I wouldn't even call it a red ripple at this point. It was the worst showing for a minority party that I can think of since 2002, and that one required an act of war. I think that the 2023 Congress is going to be lucky if they have a decided speaker, and it's going to be very difficult to govern. So that's optimistic for the lame duck session. We could now possibly see the debt ceiling, but it's going to be tough.
And Lisa, you brought this up earlier. I'm assuming McCarthy's a shoo-in. I'm wrong, right?
Well, that's what I was going to ask Henrietta. How much is this really up for grabs? What is the big question in your mind?
We don't have the final vote tallies in the House yet, but he could be as many as eight votes shy of becoming Speaker next year. It requires 218 votes, no matter how you get them. And it could be that some Democrats cross the line to vote for him. I sincerely doubt that. But McCarthy is going to have a lot of people coming for his spot, namely Jim Jordan.
What does it say about Donald Trump as the leader of the Republican Party?
That the American voters are not going to vote for him the third time either. I think this was a very problematic night for Donald Trump. I know he's set to declare on the 15th, or that's what he's been saying, but I wouldn't be surprised if he reassesses. After he makes any kind of declaration, he's got 10 days to file with the FEC if he wants to seriously campaign again. He is down on fundraising against DeSantis. He is down in Republican support by 7 points versus the last time he ran. He's down by 12 points with independents. It would be ill-advised, and I imagine he'll be hearing that from a lot of folks today.
When you looked at the exit polls, Henrietta, everyone was concerned about the economy. That was the first and foremost concern, inflation being the preeminent issue there. How much does this really speak to other drivers of people to the polls, potentially some of the social issues or other concerns, not necessarily what typically people vote for, which is the pocketbook?
Exactly. I mean, you're looking at 8% inflation, $5 gasoline, and you're still going to keep the majority party in Congress. It is a huge referendum. Republicans need to focus on serious issues and have serious answers to the American public about how they're going to bring gas prices down. It's not enough to just rail against whatever the Democrats try to do. The SPR release obviously has worked to an extent, and voters are a lot smarter than I think Republicans are giving them credit for. And that's going to be something that Republicans need to reassess today. Again, if you're going to come in to an election as the minority party and not win the Senate outright or the House outright, and perhaps have the lowest show out in an 8% inflation environment, you need to really reassess your message.
Henrietta, just quickly, what time does Biden announce that he's running for 24?
Oh, good. There's the question of the day.
I'll be honest. I think if Donald Trump does not run, Biden will also not run. And we could be facing a situation in America that is unprecedented, where we have two human beings that could run again that both choose not to. I think Biden's decision depends on Trump's decision. And like I said, I think there will be some serious reassessing going on at Team Trump today. There should be.
That decision comes November 15th. At least we're expecting it to. Henrietta, are you suggesting that it might not come about at all?
I mean, I know I'm wildly out of consensus on this, but it's been my view for a while that the polling and the fundraising dollars are sending a message that President Trump cannot win again. I think last night proved it again. I think he's facing serious threats from DeSantis. We saw his own Secretary of State, Mike Pompeo, come out in favor of DeSantis in his own way. We see the Vice President Pence is also preparing to run. The very next day, he's dropping his book and holding a town hall. I think there's going to be a lot of challenges within the Republican Party.
Henrietta, thank you. Henrietta Trace there of Vader Partners, TK.
Can I just say that having Henrietta Trace on is a breath of fresh air. Whether you agree or disagree with her, doesn't matter, but it's a breath of fresh air versus the wall of nonstop punditry I've heard in the last 24 hours. She's just great about the specificity of what goes on in Capitol
Well, let's talk about the specificity. What was the word again?
I can't. I'm
you
too
can
tired
do it
to get it out.
I can't do it after not sleeping.
Yeah.
Nailed that. November 15th. Are we saying he's not going to make the announcement when it felt like a pre-announcement of an announcement?
I'm going to leave that up to people smarter than me. But what's interesting is Lisa's comment on McCarthy of California and the legit national champion wrestler Jim Jordan of Western Ohio. And the common fabric there is they are hinged to the former president, particularly Congressman Jordan.
What happens if Donald Trump announces a presidential run on November 15th, as widely expected, and then loses, and Ron DeSantis wins, or is not necessarily the front runner? And to your great question of what does Joe Biden do the Democrats need Joe Biden to beat Donald Trump if his ratings were not really showing any particular gain for the Democrats, which is the reason why this was so surprising?
It's going to be a fascinating couple of weeks, isn't it?
Yes.
Say it again, specificity.
Specificity.
Nice,
yes.
Great. I'll practice that. That was wonderful. Nice work, TK. Equity futures down 0.1% on the S&P.
I get paid by the syllable. 5 syllables, not bad.
Nice. Nice. Maddie Zhu at Credit Suisse up next. This is Bloomberg.
Divided government means you're not going to get very strong action in terms of things like fiscal policy.
We like gridlock because it gives us certainty in a sense.
I do think that the midterm elections will just be a small blip in what we see in markets.
We're thinking about the midterms, we're thinking about inflation. But in the background, you have quantitative tightening.
Underlying growth and Chinese growth and European growth, these things have gotten worse.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
The red wave that never was, live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. In many places, TK, still too close to call.
Stunning. We just heard this from Henrietta Treyz, who I thought was lights out and opinionated, and that maybe this is the most interesting midterm election of the modern age.
The fact that at 7 a.m. Eastern time, we still can't call the House, Tom, is quite something, isn't
Not
it?
the Senate, the House. The Senate, we still can't call that either. But to see the House, and I'll talk about this with Anne-Marie Horton in detail, I'm looking to California there to get out front of it. But there's many uncontested elections. And there was one great chart, I'll give CNN credit, I can't remember who, of X number of races, John, where on a percentage basis, you go to three decimal points.
We always knew the Senate would be tight. And I think we always knew at this time this morning, we'd still be talking about a tight race in the Senate, maybe a handful. I think we still got 4.
Yeah, well, and this is expected. The one that was not was the House. And the fact that you saw such resilience in so many races for the Democrats has people wondering, is this because of Democratic policy or is this still a referendum on Donald Trump? And I do ask this because the Donald Trump-backed candidates were not overwhelming winners the way that some people had expected. The messages are not clear. I've always said nuance doesn't play in politics, but nuance was what played in this particular election.
Well, let's talk about the big loss for the president in this particular election. It was in Pennsylvania.
Yeah.
It was his
former
man.
president.
It was Oz, the former president, of course. It was his man. It was Oz, Tom. It wasn't McCormick. Could have been McCormick versus Fetterman. It wasn't. You had the nod from the former president for Oz, and Dr. Oz lost. So you've got that loss for the former president. We could talk about where he had wins. Where the governor of Florida just had a massive win, Tom, was just right across the state.
Completely separate from every other discussion.
Absolutely. So if you wake up thinking of winners today, thinking about the race for 2024, Governor DeSantis has got to be right up there this morning.
He's got to be up there, and also he's got to be sitting, you know, I'm sure he's got a beautiful house with a beautiful room where he can look out on a beautiful ocean, and he can take every single phone call from every single Republican this morning. It's a different conversation than it was 24 hours ago.
The conversation about the current president, Joe Biden, a different conversation for him as well this
Well,
morning.
you brought that up in the
doubt.
last hour. You're dead on. I mean, what's the timing here? Seriously, folks, we've got inflation tomorrow, and that matters. But, John, what is the date calendar to get to Mr. Trump's November 15th? We don't know.
I won't offer my opinion on this. I'll take Henrietta Treyz of Theta Partners. Henrietta basically said that she still doesn't think that he's going to make a run for this. But if he does on November 15th, that's going to be the trigger for the current president to make a run himself for a second term. Her words, her view.
I'm not going to speculate on this. What I am going to say is there's a lot of other candidates out there on both sides. And one of the things we learned yesterday is, and Greg Valliere will come on as well, are we going to have debates in 2 years less of 9, 8, 7 people on stage? I guess that's what we're going to have.
We've been having that conversation, Bramo. I think we've been trying to work out that if you do get Donald Trump making a run for it, does anyone else compete against him? I think after the results in Florida last night, we can push that conversation to one side. If Joe Biden makes a run for a second term, does anyone run against him? I think we don't know the answer to any of that yet.
But what happens, and to your great question to Henrietta Treyz, what happens if Trump does run, then Biden will run, according to her? Well, what if Trump doesn't win the primaries? What if we really do see a Ron DeSantis win and then Biden isn't contested? What do you get?
But what did we learn about our geriatric politics last night? Grassley won in Iowa. Gentleman I admire immensely. Forget about the politics. The welder from Iowa barely won in Iowa. And you look at his age, you look at Trump's age, you look at Biden's age, and on and on. A very fragile Nancy Pelosi on CNN, I believe it was yesterday, after the horrific terror in her family. These people are older.
Are you
You're looking at me just like that.
No, I'm just saying I'm not in a position to discuss geriatric politics, and that was
I think
that was
the
your,
nation is,
that was
John.
your-
I think the nation.
that was your phrase.
Are you discussing geriatric politics in the United Kingdom?
No, I think our prime minister's in his 40s, isn't he?
Exactly.
Yeah,
It's
different
the
conversation.
most bizarre American thing.
Look at those markets. That was your phrase. Don't let anyone pin that on me. Equity futures right now on the S&P, negative 0.2% on the S&P 500. Waking up to the news that I think many people in this market just wasn't looking for. They were waiting for gridlock just to move on to CPI tomorrow, and that's not what we've got yet. Yields basically unchanged on a 10-year, 4.1279. Euro dollar in and around parity, negative 0.2% on that currency pair. And Lisa, back in the 80s on crude, WTI $88 a barrel.
So we're very focused on tomorrow's CPI print. Today we get a bunch of Fed speak ahead of that, including Richmond Fed President Tom Barkin and Minneapolis Fed President Neil Kashkari. At 1 p.m. we do get that 10-year auction from the U.S. Treasury Department, about $35 billion of 10-year notes. How much do people start to factor in a decline, a deceleration in inflation, a peaking out in Fed funds rates after we did see a sort of hawkish tilt to the rhetoric and yet pretty calm in the markets? And today, the earnings churn does continue. We get Beyond Meat, Wynn Resorts, Rivian Automotive, a bunch of them aftermarket, but a lot of us are focused on the 11,000 job cuts, the 11,000 firings that we're expecting from Meta to be unveiled throughout the day, 13% of the entire workforce. And I do wonder, John, whether this is a Meta story or whether this is a predecessor of what's to come.
I'd say it's a Mark Zuckerberg story, that's for sure. Yes. The amount of spending we've seen there over the last 12 months on the metaverse and how that's failed to gain any real traction, Tom, with investors. And we've seen that play out pretty clear for all to see over the last couple of weeks.
You know where I feel in this.
I know how you feel about it.
I don't like that we bundle all of big tech together. That's what really upsets me.
That's the question that Lisa's ultimately raising. I think when you look across tech, though, you can see where the money's been, where the investment's been over the last decade or so, not just the last 2 years.
You need profit. I don't see it in Netflix. I don't see. I mean, Sweeney says I'm wrong. There is profit in Netflix. Where's the profit in Facebook?
I don't see it. I don't see it in the metaverse.
I don't see it.
That's for sure.
Yeah.
Mandy Zhu joins us now, Chief Equity Derivative Strategist at Credit Suisse Securities. Mandy, we're having a different conversation to the one I think we expected we'd be having. Your thoughts on the results overnight?
I mean, I think, what the market was expecting certainly was gridlock. And, I think we'll see. The results are pretty tight. I definitely think, expectations of a red wave is not going to play out. But, in the immediate term, my view is that the catalyst for market and what everyone's positioning for is CPI tomorrow, right? Regardless of the outcome in the House and the Senate, it really doesn't change the near-term picture. And the near-term picture and the near-term risk is about Fed. It's about inflation. And I think that's, and if you look at what's being priced into the volatility markets, tomorrow is certainly the big event.
All right. Mandy, let's dovetail your derivative study, your cross-moment study into the election results. It's about a gallon of gas, and you brilliantly link oil with China and with the skew, one of the cross moments that you see within the bet on what oil will do. Does oil signal over $100 a barrel?
Yeah, so what we noted is that recently there's been a very clear sentiment shift in both Chinese markets, like Chinese stocks, as well as China-sensitive assets such as commodity. And this really came about over the past week when speculation really started building that China may soon end its zero COVID policy and reopen its economy. So what we've seen over the past week is just a surge in upside call buying in Chinese equity, so FXI in particular. And then within the commodity space, obviously a broad rally across the board, but with oil specifically, for the first time since April, we're now seeing traders price in more upside risk to oil than downside risk. First time since Shanghai went into a lockdown in April. And that's, to me, very notable that what is really driving the price of oil, certainly the assessment of risk with oil, it's China, it's not Russia, Ukraine. It's really coming from the demand side.
Mandy, do you think that the positioning now has the market overpricing the chance of a China reopening in the near term based on the fact that authorities have come out and basically said no way, and you're seeing case numbers surge?
Yeah, so, my view is that it is premature at this point. So what I'm looking for in terms of concrete signs that China will eventually reopen is an approval of an effective vaccine, right? So specifically an mRNA vaccine. Without that, to me, it is premature. So, what we've been recommending clients to do is that if you are looking for upside exposure in China, given the repricing higher in all of the macro assets, you've got to go deeper, right? Dig deeper into the micro. So look at the stock level. So one of the divergences that we highlighted is while all the macro assets have repriced significantly over the past week in terms of all the upside call buying, driving up the volatility in those assets, at the single stock level, we're not seeing that reaction yet. So look for stocks with high China revenue exposure, where actually volatilities have fallen over the past week. So if you're looking for the upside exposure, that is a more effective way of gaining that exposure. And then at the macro level, I do like overwriting, FXI. I do like overwriting energy and some of the commodity sensitive sectors at this moment, given the bid to the upside that we have seen.
I'm not really understanding all the narratives that people are suddenly buying into, Mandy, given that we've heard from Fed Chair Jay Powell, and he's talked about a higher Fed funds rate, and you've seen the data come in stronger than expected. I'm wondering how much of what we're seeing is simply investors being well behind their benchmarks, heading into year end, not wanting to miss a melt up, and that's where the conviction is coming from, nothing fundamental.
There's certainly, I would say, a part of that. So where we've seen in the U.S. market, the strongest dislocation is actually in the NASDAQ, where we are seeing that demand for upside, right? So obviously, NASDAQ tech has been the most impacted market or sector from higher interest rates this year. So that is where people are going to play a rebound. So if you look at NASDAQ skew, for example, on the call side, that's currently at a 5-year high, whereas in the S&P, you're not really seeing that similar bid to the upside that you are seeing in NASDAQ. So certainly, I would say kind of a little bit of a year-end squeeze, hedging, upside tail risk hedging, in my view. But, I think right now, again, it will come down to tomorrow's CPI number. We've been in this position before where markets were started to play a dovish Fed pivot. We were in this position back in July. Markets started pricing in, 50 basis in September, 25 basis points in November and December. And of course, we got a couple of high CPI prints and here we are. So to me, I think, it will come down to the CPI print tomorrow in terms of what it would actually allow the Fed to do. The Fed wants to be more dovish, but will inflation let the Fed, make that shift? I don't know.
Mandy Zhu, as always, thank you, of Credit Suisse Securities. Mandy, thank you very much. Looking ahead to CPI tomorrow, the numbers look like this. And of course, as always, we'll be very focused on the front page of the newspaper and headline year-over-year inflation. On Wall Street, the focus on month-over-month core. So I can give you both the estimates right now. Month-over-month core, still looking to come in at 0.5% in our survey at the moment. That's the median estimate. And if you take year-over-year headline, 7.9. So will we come inside 8%? I guess it's a low bar when you think about it that way, or rather a high bar, but you know what I mean. Bramo, going into tomorrow.
What counts as a softer CPI inflation print, given that we have seen such broad-based inflationary impulses? If we see an ongoing spreading out of where the inputs of inflation are coming from, even if the headline number drops below 8%, does it really matter for the Federal Reserve?
Mike Dada of MKM Partners, and he's been wonderful on this over the last year or so, Tom. This Fed's being emboldened by lagging indicators. That's troublesome going into next year. And their approach almost guarantees that they over-tighten, and that's where the bias seems to be, and that's what they're communicating to you as well, because they're basically telling you we still think the risk of doing too little outweighs the risk of doing too much.
And the Latin on this, and to be clear, Darda's expert on this, going back to his days with the great Jude Wininsky, right out of Wisconsin. But the bottom line here is it's all ex post, and this is a central bank like Bank of England and all, they've got to be after the fact. And as you said earlier, John, 2 inflation reports before an ex-post December meeting.
And some projections as well from the Federal Reserve in December too. Coming up, Jim Paulson, looking forward to that conversation of Luthold Group, who'll join us in the next hour, live from Washington, D.C. This is Bloomberg.
Expected that we were going to turn these red counties blue, but we did what we needed to do And we had that conversation across every one of those counties. And tonight, that's why I'll be the next U.S. Senator from Pennsylvania.
What a hotly contested race that was. Senator-elect John Fetterman, Democrat from Pennsylvania. Live from Washington, D.C., the nation's capital. Your price action looks like this on the S&P, negative 0.33% on the S&P 500. Just a little softer, lighter negative. TK still waiting for these results to roll in.
Waiting for the results. We're following it as best we can in the Senate and surprisingly in the House as well. We'll bring you those numbers really here at 7:18 Washington and Wall Street time, a little early in the morning to get the counting going again. John, I would suspect, what do you think, 10 a.m.? We may get begin to see some more results.
To Anne-Marie's point, maybe 4 more weeks in places like Georgia. Might have a runoff there.
Anne-Marie Horton joins us right now, and I'm going to go geometric on her. There is a thing, Anne-Marie, called a proportional map, which I love. It would be in the United Kingdom, London would be ginormous. In France, Paris would be ginormous. On our map, Texas is oversized, California, Florida, etc. The undecidedness of California on this post-election morning is stunning. The number of seats that seem to be close. What is the character of the politics of California? Inform us on that as we try to figure out what the House will do.
Well, even when you look at the mayor of Los Angeles, right, you think that would go Democrat, but Mr. Caruso ran a very tough race
Still
for
undecided.
this. We have a lot that we need to know about California. And also, California, you need to remember, they are behind us in the time zone, right? Because so a lot of this also takes a long time to trickle through, especially if they're very close races. But two things that come to mind for California, really big national issues, but especially acute in California. Gasoline on average across the nation this morning is $3.80. California, north of $5.
Yeah.
So what everyone in the nation was dealing with in June when Biden's approval rating went down because gasoline spiked, California is still dealing with $5 a gallon. That's one issue. The second, of course, in some of these big cities is crime, homelessness, and they feel like the Democrats haven't been able to get under control.
I mean, within those major issues, and I was surprised how immigration was there equal to the inflation debate, particularly in the Republican exit polls. To pick one of those issues, inflation, and we just talked to Mandy Zhu of Credit Suisse about this, is a gallon of gas still the front-running topic into 2023? In
a place like California, it is. Also, they heavily tax it, right? Maybe these constituents are saying no more. This transition, places in California, you see people lined up with their Teslas and only being able to charge on a Tesla machine, but these are the very elite places that have the money for this kind of transition. I think energy will be a huge conversation going into 2024 because we're also still dealing with a war in Ukraine. And right now, what we're waiting on is what happens to these Russian barrels come December. What happens when China opens up? The China lockdown story has really saved the Democrats this year. China is not using the amount of energy they normally would use because they continuously lock down cities north of 5-8 million of people.
This is actually speaking to the question that we've been asking continually, which is, if China reopens, is that a good thing or a bad thing for the economy? From the sources that you speak with, is the predominant feeling in Washington that it's a bad thing because of what it does to gasoline?
It's a bad thing on the energy space, but also China is a growth engine for the entire global economy. So maybe if there's recessionary fears, China opening up could help. But in terms of energy, I mean, they've been hoarding energy and they're not even open.
Yeah. Well, and this has been a huge concern. We've talked about Florida. We've talked about California. New York, a really interesting race. Kathy Hochul did get elected, the first elected governor who is a woman in New York. But it was one of the narrowest margins going back decades. And you saw some Republican wins, certainly in some more local races. Is there some takeaway as to the why here?
I think there's going to be a huge postmortem. That's how the New York Times wrote it up this morning, a huge postmortem on Hochul. Why was it so close in the end? Why wasn't she out campaigning more in front of the cameras weeks ago and had to wait really to be pushed by Zeldin? The story for New York is crime. Another big, really interesting race, which I don't believe it was called yet in the House, but does look like it's going to go for the Republican, is the 17th district. Hudson Valley Maloney likely is going to lose his seats. These are big flips for Republicans because this is deep blue New York.
If I had a ratio of media attention to performance, the one that would be shining brightly right now, Kari Lake in Arizona, how much media attention did that race get? And that individual specifically?
A ton of media attention.
Not looking good there.
No, right? Again, we need to note the votes are not in yet,
Sure.
right? There's a lot of mail-in ballots that need to be voted. There's rural votes that usually lean Republican in a lot of, like in Nevada and Arizona, that we are still waiting for. But right now, you're right. She's trailing. And what is she doing immediately as she's trailing? She's trying to say that there was some nefarious actions going on for this election. And also, if she's losing, that means the former president is losing because he backed her big time.
That was a Trump-endorsed candidate, Tom, and for a lot of people felt like it was nailed on if she'd won that race, that she'd be a future VP of a Republican candidate.
This future VP thing is not a small item. And, I understand it starts for 2024, but the jumble of this morning makes that incredibly cloudy because I don't even think we can get to a future presidential candidate.
Is there a message within all of these races that the moderates actually won in some capacity? That if you look across the different locales, that more moderate candidates were the ones who really surged to the forefront, with some exceptions, and the more extremist ones weren't able to put up the performances. I take it on a type 2 basis
that the extremists were pushed aside. Seems to be where I am. Can I ask a dumb question? Is 1600 Pennsylvania ecstatic this morning?
Well, for Biden, this is the best outcome for a president in terms of a midterm election since Bush after 9/11. And that speaks volumes, because that speaks volumes for him. I mean, look at 1994 with Clinton. That flipped. The Obama years, it was the Tea Party sweep. The Trump years, a lot of women came out. They didn't like the divisive language. And yet this president, which they were very concerned with, even him acknowledging this week that it's going to be very difficult in the House. Obviously, there were still concerns about the Senate. They were able to keep what is going to be likely a divided government, but it was not the wave or tsunami that some were predicting.
Not at all. With inflation at a 40-year high and an approval rating in the 40s, I think, Tom, you can call this a win for the sitting president.
I would say so, yeah.
May still get gridlock, may still get some kind of red wave, red ripple, whatever you want to call it, but relative to where his approval ratings were, this is a pretty phenomenal turnout.
But I was speaking to Peggy Collins, our bureau chief. She's been up all night, and she said one thing you have to remember is people still have jobs. That is one thing that this administration has been trying to hammer home. Look at the unemployment rate right now.
AMH, great to have you with us in the studio. She's going to stick with us through the morning. Anne-Marie Jourdain there in Washington. Eric Nelson's coming up from Wells Fargo. Looking forward to that from Washington, D.C. This is Bloomberg. 2 hours away from the opening bell, 25 hours away from a CPI report in America. From Washington, D.C., equities down by 1/3 of 1%. On the S&P, on the Nasdaq 100, down 1/3 of 1%. Also on the S&P, 3-day winning streak into Wednesday, Monday, Tuesday gains. Can we get some gains as well this morning? We had some gains on Friday too, off the back of the payrolls report. In the bond market, 2s, 10s and 30s. 2s still hanging out in and around some multi-year highs. South of 470, 466. 56, up about a basis point. Highs of the year, Tom, came on Friday, shortly after the payrolls report, pushing 480. Haven't seen those levels since 2007.
How does the investment debate, and dovetail it right into these political results, shift with a 5% 2-year yield? Let's say 5.02%. That's a huge deal from here.
All of this depends on if it persists.
Yeah.
Do we have to recalibrate to some kind of new normal? Some people might call it the old normal, of Fed funds in and around 4 to 5% for the foreseeable future.
For Jim Jordan of Ohio, Western Ohio, rural somewhat, and some urban aspect there. Maybe he'll take out McCarthy to run the Republican Party in the House. His constituents get a CD return that they haven't had in generations. Maybe the market churns or the market solves it. I've got my theme of zombie companies till 2023. But what does a 5% 2-year mean for Republican and Democrat?
Well, fantastic if you've got the savings, whether you're Republican or Democrat, if you've got the savings. But this isn't controversial to say. Thank you.
Thank you.
This is not controversial to say. That number, we haven't seen the economic consequences of that number yet. Maybe we're starting to see that, but we haven't fully realized
502,
it.
you'll see some
So you can say
consequences.
that we've priced in the rate hiking cycle, and Lisa, you've made that point. We're pricing in maybe 5% Fed funds, maybe something north of that. We can have that conversation. Can you make the argument, Tom, that we've fully realized the economic consequences of that rate hiking cycle? I don't think so.
Not even close. Not even close. And again, 2 inflation reports will give us some information.
Sure. And think about how quickly things have moved as well, Bramo.
Yeah,
What is it, 8 months and about 300 basis points plus the tightening?
What did you say? That we started about 12 months ago, the 2-year yield at 40 basis
40
points.
basis
And
points.
now we're well
Pushing
north of 4%.
5%.
Yeah, pushing 5%. And Maria was just saying the reason why people perhaps weren't as concerned about the economy in this election was because they still have jobs. Taking a look at some of the specific names, we talked about whether people will continue to have jobs at Meta because they are cutting about 11,000 jobs today. That is when we're hearing, that is what the company has confirmed, about 13% of the workforce. Those shares lower by almost 50%, actually more than 70% year to date, up about 4.4% right now. How much is this a specific story to Meta? We've been talking about it all morning. How much is there broader implications? And I'm going to get there with Disney in 1 second. Tesla shares are interesting to me because we did hear Elon Musk selling another $4 billion of shares. That stock is up about 1.4% in pre-market trading, in part because people think maybe we've seen the worst of it in terms of how much he has to sell and that perhaps that overhang isn't there anymore. And Disney, I want to sit on this. They released really disappointing earnings. They are looking for meaningful efficiencies. That is a direct quote after reporting results that fell well short of expectations. Those shares lower by 7.5%. They missed all estimates. The losses are just accelerating in the Disney Plus offering. It raises questions. That is going to mean job cuts in Disney. It is also going to mean a real rethink of content is king as the predominant theme, Tom. And we've been seeing this from Netflix. And how much is this really the next wave of potential cuts ahead?
It's going to be out there. Paul Sweeney's been just brilliant on this. Bloomberg Intelligence with a real, I think, understanding of the streaming battle. And the answer is, where's the profits? Where's the beef?
And if you don't get those profits,
simple.
again, is this, and John, to your point earlier, is this just the past 2 years of excess, or is it 10 years of excess? The years of excess built up post-pandemic of the content that people consumed at home versus something bigger about free money and how much people can really play with it.
Just think about how much they've changed industries with that content model in the movie business over the last couple of years. Throw in serious money at content, and the whole business is just totally recalibrated around it. And that's not just 2 years. That's a long time we've been seeing this happen.
I think you're right. So then if you have all of these secular trends that are being rethought and retrenched, what kind of cuts do we see start to accelerate that we're now seeing in the tech industry?
Warner Brothers Discovery goes 25 down to 10 with a 9-handle print here. They're not Disney, but the solution is simple. They do a Meta.
These companies didn't get a cyclical test in a pandemic. I
Correct.
keep going back
They
to
got a
that.
free yep.
We got monster
Yep.
fiscal transfers. They all benefited from it hugely. In fact, for some business models, it was an accelerator. And I'm thinking about the stay at home, watch whatever you want stuff, click of a button. Yeah. They have not had a cyclical test. This business model has not had a cyclical test. And when we go into an economic downturn in the next 12 months, we'll see how well they do.
We will see. And I totally agree with you on the fact that they missed it with the pandemic as well. We welcome all of you on radio and television. We are in Washington here to pick up the pieces of an election. There are many to pick up, and they fold right back into the litmus paper of economics, finance, and investment. And that is, of course, the foreign exchange markets. Eric Nelson joins us now from Wells Fargo, their currency strategist. Eric, I thought your note was wonderful, engaging the economic undecidedness out to 2023. We've got a dose of that in Washington politically this morning. What is the key indeterminate for dollar strength or dollar weakness? What is the key mystery into 2023?
Well, Tom, the politics certainly matter to some extent. There's some ramifications for markets, bond market, FX market, and thinking about the funding markets in particular. But as we think about the outlook for 2023, it's less to me about politics and more about central banks. Central banks are really still in the driver's seat here. We're very focused on the Fed here. Everyone waiting for that Fed pivot. The problem for me, and thinking about the dollar outlook into next year, markets have not adjusted to this new Fed. They're still thinking about the Fed in the 2018, 2019 context. When will they pivot? And the Fed is out there telling you time and time again, we do not want financial conditions to ease. And there's many axioms out there, and you never want to fight the Fed. And the Fed wants tighter financial conditions. They want a stronger dollar. They want lower asset values. And that's going to continue to be the trend, in our view, heading into next year.
I don't want you to be an equity strategist, but why not? Will the Fed pivot tomorrow, and should I get out of cash?
Well, you and John and Lisa were having a great discussion earlier about the risk-free rate, in particular the real risk-free rate. We're looking at 1.5%, maybe even 2%, depending on where you look on the curve at real rates. It's a very enticing opportunity there relative to where we've been the past few years. And certainly we're seeing that reflected in relative performance and absolute performance of assets. I'd say I'm very concerned about year end, particularly from a funding perspective, thinking about the moves we've seen in the market this year. And that could be what really drives in the short term here a reversal of some of this dollar weakness that we've seen.
What are you saying in particular, Eric? Are you basically saying that a shortage of dollars in developing markets are going to really cause a surge in the dollar? Are you talking about just in general around the world that you're seeing mismatches with QT starting to accelerate?
Yeah, Lisa, what's so different about this cycle relative to 2018, 2019, you have central banks across the globe both tightening policy via short-term rates and via balance sheet reduction. So liquidity is continuing to be sucked out via two really key forms here. The Fed still has QT on autopilot. And while we've seen some central banks pivot on short-term rates, the ECB, the Bank of England are continuing to press ahead with, in the case of the Bank of England, outright asset sales. So there's not enough attention, in my view, on some of the flows here. And Tom, I know that the word flows is one you'd like to talk about quite a bit. The reduction in liquidity is so substantial here. We're just, I think, in the early innings of seeing the implications. That's a really important factor, I think, for dollar strength here heading into the new year.
Just to give a real sense of the significance of how much you see some sort of strengthening, people have been talking about the potential for a financial markets accident. Some people pointing to the dollar as a potential source of that. Do you see this being so extreme so as to really disrupt functioning in a more significant way?
Well, yeah, it certainly depends on, Lisa, on the extent of inflation we continue to see over the next, I think the next 2 to 3 months are certainly crucial. The Fed, if they see another 0.5 or 0.6 on core CPI tomorrow, they're going to continue to press ahead, push that terminal rate market pricing higher. QT is going to continue at a steady pace. And what concerns me is you think about the dollar strength we've had year to date. It's been mostly macro driven. So central bank divergence, growth divergence. The dollar strength we've seen has not really been funding driven or safe haven driven the way it was in 2020 or 2008. If we were to see something of that nature, where we really see a stress related dollar strength period, that could be another significant, 5-10% move higher in the dollar. And I don't think there's enough attention being placed on right now.
Eric, awesome to hear from you. As always, Eric Nelson there of Wells Fargo. If you're interested in how the Fed's going to respond to the CPI print tomorrow, take a look at Fed Speak tomorrow. I can tell you Waller, Harker, Logan, Daly, Mester, George all speak tomorrow. So you're going to find out pretty quickly, Tom, what they think of that CPI print.
What do they say after that press? Let's be honest. The press conference shocked me. I think it shocked a lot of other people. We went from cumulative for a cup of coffee to whatever was witnessed with Powell. And then these poor souls have to follow on.
Lisa, your thoughts?
The market's doing exactly what they wanted to do, which is to take their message in stride and be calm about it. Although they probably would like to see even a little bit more tightening and actually even more of a sell-off and not the rally that we've seen over the past couple of days. So why would they come out with anything other than a hawkish message? Why would they come out with anything other than reaffirming this belief that perhaps rates can go even higher than people expect?
John, Bloomberg Financial Conditions Index, it's moved more accommodative through -1 standard deviation. That is a fact they all know.
The Fed speak always comes down to emphasis. You can say on the one hand this, on the other hand this. It always comes down to emphasis. Will the emphasis of the Fed speak be on the cumulative tightening they've already delivered, or will it be on what the Fed chair talked about in the news conference, which is ultimately the terminal rate needs to go higher?
Or will it be wherever the market is and then trying to jawbone it into another place?
Which essentially is what has been the job of the last 12 months. Futures negative from DC. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. There was no red wave for Republicans in the midterm elections. The GOP had hoped to capitalize on President Biden's low approval ratings and swamp the Democrats in Congress. Republicans appear likely to have the House, but with a very narrow majority. And the Senate, still up for grabs. Democrats scored a big win in Pennsylvania, where John Fetterman was elected to the U.S. Senate over Republican TV celebrity Mehmet Oz. In one of the more highly contested races, J.D. Vance turned back Democrat Tim Ryan to keep an Ohio Senate seat Republican. The Georgia Senate race was too close to call. Democrat incumbent Raphael Warnock and Republican Herschel Walker may be headed toward a runoff that could decide the fate of the Senate. In Israel, Benjamin Netanyahu was officially confirmed as the winner in the national elections. That puts a former prime minister on track to form a right-wing coalition government that could complicate foreign relations. Israel's president is expected to ask Netanyahu to form a government in the next 4 weeks. And cryptocurrencies extended declines as doubts grow over Binance's possible takeover of rival exchange FTX, which suffered a liquidity crunch. Bitcoin fell as much as 5.4% on Wednesday after a near 10% drop a day earlier. Ether, Polkadot, Avalanche, Solana, and Dogecoin also slumped. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
I have fought the good fight. I have finished the race in this first term, and I have kept the faith. We've accomplished more than anybody thought possible 4 years ago, but we've got so much more to do, and I have only begun to fight.
You heard the chants in Florida for Governor Ron DeSantis, the Republican. 2 more years. 2 more years. Bramo, 2 more years. And not 4, and there's a good reason for that.
Basically, he is the shoe-in. That is the assumption for the presidential election,
Ooh,
and for him
really?
to be the main candidate.
Shoe-in? You think so?
Well, that was the implication of that. I mean, 2 more years for his supporters to chant that when he's about to serve for ostensibly 4 more years. If that's being a positive thing, then that is the only construction that you can have from it.
For the people of Florida, Tom, I think he's a shoo-in. Whether that's true for the rest of the country remains to be seen.
The victory for Florida was extraordinary.
Crushing.
It was early in the evening.
Crushing. Was it 8 p.m., something like that?
Yeah, I mean, there's a lot of uncertainty out there. There was no uncertainty about Florida.
Not at all.
Let's do this. Let's get right to it, and we do it with someone that's given us phenomenal support over the years. Greg Valliere of New Hampshire is a student of American politics. He's chief U.S. policy strategist at AGF Investments, and like me and our team, was up most of the night in shock. What was the biggest shock, Greg?
Oh, I think there were several in several big states. I guess the big shock was that after everyone said abortion wasn't going to be a big issue, it was a big issue.
I look, Greg, at where we go. Let's move forward as best we can. And part of it is within the lame duck structure of American politics. Business still has to get done. Given the lack of a Republican wave, given some Democrat strength, what do the next 2 and 3 months look like?
Good question, Tom.
Well,
I think that they have to tackle very big budget bills. Shoot, can you hear me, Tom?
I think we can. Greg, I think we've got some technical difficulties. We're going to step away from that and see if we can reconnect with Greg Valliere. And John, this goes to the lame duck nature of American. Is there a lame duck in British politics? I don't think there is.
Can I just say what a classy guy Greg Valliere is to choose the word shoot when he thinks that he's no longer on air?
Oh, I don't know what it is. I just, I think Greg,
that's not the word that I would have chosen at that particular point.
I don't know. I misspoke there. But is there a lame duck in British politics? I don't think there is. Like, you lose, you're out.
Well, you lose, you're out. Particularly
like the next day.
Number 10 Downing Street, the removal van arrives and you take out your stuff and
we don't do
and you're
that.
gone.
And as Greg mentioned before we were on air with the technical difficulties, it's going to be a stunning November, December.
So I'm going to fold the market stuff in, because I think we've all seen the same charts over the last few months about divided government and the performance in year 3 of a presidency, often always the best year for a presidential term. You get year 3 and the equity market rips. Jim Reed of Deutsche Bank this morning. In conclusion, the midterms and subsequent positive equity performance charts that you're seeing from me and others have to be put in context, unless, of course, you think the lack of a year 3 recession through history can be easily explained and is likely to repeat in 2023. If so, please let me know ASAP before I finish my 23 outlook.
Right. Well, I mean, how much can you look at seasonality at a time of such stark differences when it comes to the backdrop? And that, I think, is what a lot of people are asking. Hard to know how people are reading the politics in this. Every single person who's come on this show has said it is not about politics. It's about inflation. It's about the Federal Reserve. And it's about what's happening internationally with China potentially reopening or not. And that really is going to still be front and center, especially with gridlock in D.C.
And this is the great link between the haves and the have-nots in America. They're both focused on inflation, maybe for different reasons. But this report that we see tomorrow, John, is an American report for all Americans.
The question we're asking, and Lisa put it well, is midterm seasonality, so-called midterm seasonality, relevant to this market if we're staring down the barrel of 5% Fed funds, a recession in America, and ultimately the who knows what's going to happen in China? I think there are all a lot of big questions you've got to ask, and the outcome there is going to define 2023, not just the fact we happen to be in year 3 of a presidency and what it means for this equity market.
Right. In other words, if we're not looking at the same parameters, do these models even matter? And that's going to be something people ask. I will just point out, and you guys are going to groan, but the debt ceiling debate. How do we deal with that, given the gridlock, if we are dealing with people who are concerned about inflation and want to seem strong on that? Do you get more of that kind of noise kind of coming into the picture in a negative way?
I'm not going to groan. I just think we're all sick of doing this.
Well, we're totally sick of it. It's obnoxious to talk about, but at the same time, people are already starting to talk about it. There have been a number of opinion pieces from economists talking about how this is going to be another issue.
We just recycle the same notes from the last time, don't we? On the south side.
This is
you think
very,
this is different?
Very different. It's, you know, the whole economic mix and the market mix as well, I think, is very original. There was one thing buried in the AP's wonderful work on exit polls of the divide between Democrats and Republicans over a simple question. Do you feel confident you could get a job now, or the next job, or whatever? And Republicans have, as you mentioned, a recession. They have a stagflation, stagnation, recession feel out there that is not felt by Democratic elites. I mean, there's a real divide on that matter.
I want to get a quick question to Greg Valliere, who I understand has jumped on the phone for us. So thank you, Greg, for doing that, of AGF Investments. Greg, we're talking about this debt ceiling debate. Tom's asking a question as to whether it's different this time, if we have this conversation in the next 12 months again. Greg, is it different this time?
It's different, John, for one major reason, and that is Ukraine. Biden wants to spend a lot more on Ukraine. A lot of Republicans don't. And if he doesn't get it before early January when the new Congress comes, it'll be a lot tougher to get later in the year.
Greg, what will the president do here? There's got to be jubilation at the White House, but still he has a next 2-year decision to make. What's the Valliere call?
I think that an awful lot of Democrats won last night despite Biden, not because of Biden, and they ran away from him. So I continue to think that during the holidays there'll be a tremendous speculation on Biden not running again, announcing that he will not run again. I think the odds still favor that.
Tell us about the Republican side. I mean, the DeSantis shock, as John mentioned, was something in Florida. Do you anoint him, or will there be a path there for the GOP, a debate, I should say?
Tom, I don't think Trump understands how upset Republicans are right now at him, using that stupid nickname for DeSantis, but stepping on their message. In the last 48 hours of this campaign, it wasn't about their message. It was all about Trump, and a lot of Republicans resented it.
Greg Valliere of AGF Investments. Greg, thank you, sir, and sorry about the technical connection a little bit earlier in the interview. That's the second guest in the last hour. So that's Greg Valliere of AGF. That's Henrietta Trays of Vader Partners, who have both said they don't think President Biden makes a second run at it.
Yeah, and it's in the zeitgeist. I'm watching the publications come out here at 7:55 Washington. It's early for Washington. Washington doesn't move until 8:30. But we're seeing a stream of legitimate experts, John, just trying to frame out how we get to the end of the year. And part of that is front and center, this presidential uncertainty, which we knew was going to happen.
More of a caveat from Henrietta, I would say, Lisa, because she basically puts it down to what happens on November 15th, whether the former President Donald Trump puts his hand up and says, I'm ready to go.
Well, we just heard from Greg Valliere. Perhaps he will say that, and the rest of the party will say, really? Are you really going to do that?
That's the conversation happening this morning already. Jim Paulson, the chief investment strategist of the Luthold Group, is going to join us very shortly from Washington, D.C. This is Bloomberg.
Everyone's kind of probably sick and tired of hearing this, but it's all about inflation.
Gasoline prices have an outsized symbolic impact as well as a real impact in terms of how people vote.
We think that inflation is moving down, but it's not going to move down by enough to get us back to 2%.
We expect the Fed to get to at least 4 3/4, if not 5, and then to hold it there.
We're lacking really strong conviction, and that adds to the variance of the volatility of the market.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, and Tom Keene from Washington. Thrilled you're with us on radio and television. And John, let's get right to it. It's not America decides, it's America undecided.
It's a tight race in a place that I didn't expect it, in the House. I think we all expected to wake up this morning and say the House would be called for Republicans, the Senate was going to be tight. Both chambers are tight this morning, Tom, and it's going down to the wire.
I would say that if the president was coming out of 10 Downing Street to that podium with Lawrence the Cat, he would be cheering this morning. This has to be a good evening for the president of the United States.
Relative to what we expected?
Yes.
Absolutely. Yeah. But let's talk about who else it's been a fantastic 24 hours for. Governor DeSantis down in Florida.
Huge.
The former president, Donald Trump, went after one guy in the last couple of days, and it was that guy down in Florida, and he absolutely crushed it.
A lot of the zeitgeist I'm seeing, folks, here as people publish early on this Wednesday after the election is just that, of how does President Trump readjust, recalibrate, and all. And Lisa, we do this, as I said, with undecided, a Senate undecided, but shock, a House undecided.
Yeah, and really the picture is confused underneath as well. It's hard to get a real narrative going here that gives you a sense of exactly how things are going to skew in 2024. I want to point back to something that John was talking about for the past couple of weeks, which is the Democratic candidates who hadn't won in the past who are running again. And I'm thinking of Beto O'Rourke down in Texas, and I'm thinking of Stacey Abrams in Georgia. Both lost again. And this is really going to raise a question of how do you guarantee or how do you choose the candidates that you end up running, both on the Democratic side as well as the Republican side?
And maybe more important, John, than I thought, tomorrow's inflation report matters, and as with all the different interviews we've had this morning, economics, finance, investment, but the political interviews goes back to higher oil, further inflation, a gallon of gas where it is, and what it means for the fabric of the country. We revisit that now.
Well, let's go back to something you said about the President of the United States having a better night. The fact that you've got inflation at a 40-year high and an approval rating in the 40s, and we're still sitting here trying to work out the results of this, relative to all of that, that's a big win.
It's a huge win. Lisa, what are you observing now? I mean, I'm looking at here at 8:03 Wall Street, Washington time, really a quiet within the result flow that we see. That people got to wake up, rest, and all that. What do you look for today?
Honestly, the tea leaves to tomorrow, because from a market perspective, this is basically not a game changer. It doesn't. It's not conclusive in any way. Today, we're going to see the votes trickle in, not necessarily going to get some sort of result from Georgia, but the rest of the close elections. I think people are going to be watching to understand the House domination.
John, I'm going to go to the data check, and let's talk about it before your good data check. And this is a 2-year yield migration to 5%. 5% is a political statistic as well as a market statistic.
Backing away from the highs of last week and the shape of things as follows in a market. Let's start with equities. We're down about 0.1%, not even on the S&P now, almost unchanged on the Nasdaq, just about positive. In the bond market, Tom talked about twos. Let's talk about tens. 413.21 on a 2-year last week, last Friday, just after the payrolls report, came really, really close to 480. Right now on a 2-year, 467. But if you want to talk about the politics, Tom, we need to talk about the economics. We've seen the hiking cycle. We've seen 300 basis points, 400 basis points in 8 months or so from this Federal Reserve. Now we need to wait for the economic consequences of that, and we're just starting to see the signs of it with the cuts, the layoffs beginning in big tech.
Will we learn with a wall of Fed speak today? I'm not so sure.
I'm not sure either. I think you get a wall of Fed speak tomorrow after CPI. Then you've got another CPI print. Then a big Fed meeting in the middle of December. Has anyone dared press enter on their 23 outlook yet? I haven't received one. I have to say, usually at this time of the year, I'm working through a bunch of 2023 outlooks, working out the consensus.
No, you're right.
No one wants to press enter on that just now.
Unless it's a big cloud with, lightning kind of going through it. I mean, what is it? Just a big question mark?
I think they're written.
You do?
I think they're written.
Really?
Someone's going to have to do a lot of editing based on the data between now and the December meeting. And if it was me, if I was running the South Side, the research division, no one wants that. I know. If I was, I wouldn't be pressing enter until after that Fed meeting in December.
I saw the artwork, David Rosenberg's year ahead view, and it's a sun rising, and it says Morning in America as well. Let's get to it, and we do it with James Paulson. Jim Paulson is Chief Investment Strategist at Lutho Group, and he comes to us out where the politics was always expected and traditional, and is now not shattered, but so different. Jim Paulson, from the Scandinavian Northwest of another time and place, it's a whole new world after all. What does our political world look like for you this morning?
Well, Tom, I guess I'd say that after going through all this and all the expectations and wondering what it's going to come out, it seems like we might end up essentially where we were before the elections, where we have, if we even have a mild gridlock as a result of the Republicans gaining the House, it's not going to be a big majority, and it seems to me that we're going to kind of be back in the same place we were in the last 2 years. I don't know if a lot's changed. It certainly has a lot of political ramifications, how the Republicans couldn't have done better in an environment of nasty economic anxieties, and a president with a very low approval rating says something about a problem on that side of the party, I think, a little bit. But as far as the economic and as far as the market ramifications, I don't know if it really changed much. As long as there's gridlock, I think the market's going to be okay with it.
Well, Jim, let's build on that. Lisa asked the question just moments ago. How relevant is midterm seasonality, given we're thinking 2023 might be a recession year?
Well, historically, you look at the midterms, the market generally does better after that. I just don't think that this time that's going to carry much weight one way or the other, Jonathan. I don't know. I think there's just too many other important issues that probably are going to play the wag the dog here, if you will, as we look into 2023. And I heard your comments about pushing the send button on your 2023 outlook, and I agree. It's really difficult with so many balls up in the air overall. But I think people are going to focus in on other issues other than the election as their primary drivers for the outlook for next year.
You've been optimistic, Jim, and you've said that there's been a lot of bad news already priced into this market. A lot of people would agree with you, and others would push back and say 5% Fed funds rate. Are we really accounting for the potential damage to the economy from that? How do you counter that argument?
Well, I do think, Lisa, it's really interesting to reflect on the fact that we sit here in the stock market, the S&P 500 today, above its June lows and flat for the last 5 months. So the stock market fell 5.5 months to start the year, and it's been flat since. And if you think about what we've dealt with over that period of time, at that point we had a 1% funds rate, and the funds rate now is up at 4%. In June, I don't think a lot of people felt they'd get to 4% this year, and yet they did. 4 super hike 75 basis points hikes later, and here the stock market's still in the same place. The bond yield went for 10-year from 3% to 4.25%. The 2-year went 3% to 4.5%. Over that period of time, we had a lot of nasty inflation reports that scared us all to death. We had a constant scaremonger from the Fed cabal on a regular basis. And then we had the corporate community come forward and reinforce the idea that we're going to head for an imminent recession. And here we are. And we also had the headliner tech companies report disappointing earnings. My point about all this is I think the market's discounted a lot. And what is going to come that's any worse than what they've already gone through? I think this market is showing that it's discounted most of what expecting. And what you ought to think as an investor now is there are some favorable things that can happen here. And I think we've got a market that's off 25% from its highs. That's discounting a lot of bad stuff, whatever's coming. We've got a market that's now below its average valuation since 1990. We got terrible sentiment on Wall Street and Main Street, which is typically contrarian a good thing. And then there's some favorable things. One of them is we typically, heading into recession, have very high confidence, and then we destroy that confidence in the recession, which makes the recession deep and elongates it. We don't have that this time. We're reviving confidence because inflation is starting to come down as we're heading to a slower period. Falling confidence has been bad for stocks, rising confidence good, and confidence is going to be rising, I think, in the next year. Real liquidity growth right now is minus 6% year on year. That's one of the lowest year-on-year real liquidity growth rates in post-war history. It's going to start to rise, mainly because it can't go much lower, but also because if inflation falls, real growth will pick up. And finally, as the economy slows, it will throw off excess liquidity. And we've dealt with declining liquidity for more than a year, and we're now probably heading back to better liquidity, which is good for financial markets. Then finally, inflation peaks typically, historically, have been very good for the returns in the stock market in the coming year. And the last thing I'd throw out is, what if we don't recess? What if we somehow manage to stay with a positive growth rate next year? Let's say we slow to 1% growth, but we don't recess. Then earnings don't collapse, and suddenly this whole thing turned into a mid-cycle correction and a soft landing rather than end-of-cycle situation. So I do think there's some reasons to be somewhat optimistic.
That sounded bullish.
That was
Never
bullish.
mind,
It was way too
somewhat
bullish for
optimistic.
the day after election.
Who invited Jim on the show? What was that?
It can't happen again.
Jim, thank you. Wonderful.
Thanks, Jim.
Jim Paulson of the Leuthold Group. The outlook for 23. I would love to be a fly on the wall of those conversations in the banks right now. Futures, negative 0.25% from Washington. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Republican wave in midterm elections that was supposed to undo the Biden presidency didn't arrive. It appears the GOP is likely to win the House of Representatives, but the majority will be smaller than expected, and Democrats could still retain the Senate. Democrats scored a big win in Pennsylvania, where John Fetterman was elected to the U.S. Senate over Republican TV celebrity Mehmet Oz. In one of the more highly contested races, J.D. Vance turned back Democrat Tim Ryan to keep an Ohio Senate seat in Republican hands. The Georgia Senate race was too close to call. Democrat incumbent Raphael Warnock and Republican Herschel Walker may be headed toward a runoff. Russian diplomats are trying to dial back fears that the Kremlin might use nuclear weapons against Ukraine. In a note circulating among IAEA diplomats, they say that nuclear weapons would be used only if the existence of the country was at stake. Meanwhile, the U.S. and Russia are preparing to resume nuclear arms negotiations within the coming weeks. And massive job cuts are set to begin at Facebook parent Meta Platforms. CEO Mark Zuckerberg says the company will cut more than 11,000 jobs, a 13% reduction in staff. It's the first major round of layoffs in Meta's history. Meta is cutting costs following several quarters of disappointing earnings and a slide in revenue. Mortgage rates in the U.S. resumed an upward trend last week toward a 2-decade high. According to the Mortgage Bankers Association, the rate on a 30-year home loan climbed to just over 7.1%. That's the highest since 2001. Meanwhile, an index of refinancing activity, well, that fell to a 22-year low. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I'll be honest, I think if Donald Trump does not run, Biden will also not run. And we could be facing a situation in America that is unprecedented, where we have two human beings that could run again that both choose not to. I think Biden's decision depends on Trump's decision. And like I said, I think there will be some serious reassessing going on at Team Trump today.
And we're expecting Trump's decision on November 15th. At least that's what we've been led to believe.
Decision.
That was Henrietta Trace, the Director of Economic Policy at Vader Partners. Live from Washington, here's some of the price action for you. Going into the opening bout, 1 hour and around about 12 minutes away. I can tell you in 24 hours and 12 minutes, we'll only be talking about one thing, and that's CPI in America just around the corner. The inflation report tomorrow morning. Equity futures, negative a third of 1%. Tom, yields higher by a couple of basis points, 414.26. on a 10-year.
8:18 Wall Street time and Washington time. I would suggest in an hour, maybe an hour and a half, we'll start to get more results on this historic election. To frame that out for us this morning, Amory Horton continues with us. Our Bloomberg DeSantis correspondent is well. We've decided we're going down there to meet with the governor. We're going to do the surveillance treatment, the boom of Miami, all the Northerners moving down to Florida, and that.
As long as it's Miami,
we're staying at the Carolina Miami Wellness Resort. Can you see me at a wellness resort? How is the level of wellness of Governor DeSantis this morning? There's no meter that can measure it.
He's the winner of this entire election because of the margin that he really won. It's nearly 20 points. He carried Miami-Dade. This is a county that is really a Democratic stronghold. So it was very obvious that he had a very good night. The chance for 2 more years. He's supposed to have 4. His constituents want him to run for president. And already there's a duel between him and the former president.
What is the action of the governor to separate himself from the former president?
I mean, he already did. So 4 years ago, the former president really helped elevate him, right? And helped in his reelection bid. But over the past 2 years, you kind of saw a little bit more of this feud, and that started to simmer. And now it almost seems like it's blowing up. The former president called him Ron DeSanctimonious the other day in the Wall Street Journal report.
Does he ignore it?
He's been ignoring it. Yeah, he's just owning this moment in a more statesman-like, and he's really offering Republicans a lot of maybe policies the former president would also offer, but in a more statesman way. Look at how he handled the hurricane recently, and that's what he's been doing.
Which really raises a question: why did Ron DeSantis overwhelm while the rest of the Republicans really underperformed? If you take a look at expectations versus performance,
it's a good question. I think in Florida, this has to do with one big issue, which was the pandemic, and he was really steadfast about keeping businesses open, schools open, and that resonated. Also, the fact that he has just become a rock star for the Republican Party. So he's not, and Floridians know that. He's just not for Florida. He's been out campaigning, trying to help from other Republicans.
So is it a candidate issue? Is it the quality of candidate issue that John's been talking about it? Or is it just that they have to really attack certain policies and not go for as much the other rhetoric?
I think it's mixed. One, he's a known candidate that people like in Florida, and it's policies that Republicans in Florida like, and even moderates, because we see him winning some of these moderates votes. But also, he's not a Republican the way you have the Michigan candidate that the former president, Donald Trump, was really backing. This is not on the fringes so much, where then you have the Democrats able to win those races, like Governor Whitmer.
Let's sit on the races a little bit longer. There's 4 states: Wisconsin, Nevada, Georgia. We're thinking of Arizona as well. Arizona has a Democratic incumbent. That's Mark Kelly. Walk us through what's on the line here still at this time of the morning on the Senate race.
So those are the 4 key Senates. The one that we should point to as well is Georgia. Likely that is going to be a runoff, so put that to December. Arizona and Nevada, we have to wait for these votes to come in. A lot of mail-in ballots, and this could take a lot of time. Wisconsin is leaning at the moment to Johnson to be Republican. So what you really want to focus on this morning, because if you have Georgia being in December, this morning it's all going to come down to Arizona and Nevada.
One thing I have this in my mind from maybe Pew Research, in that the world shifts 2045. It seems like we're getting there quicker than
2024, 2045.
No, 45.
I don't know where I'm going to be in 2045.
Either do I. Thank you. The demographics, but Amber, the demographics are shifting, and to me, it's all happening faster than I expected.
I'm
You feel that?
I'm interested to see the demographics because one Wall Street analysis sent me what he thought which was more Gen Z voters had come out for the Democrats, more than even millennials. And what does that say about the candidates you need to put up for 2024? In your case, Tom, 2045.
Is Gen Z younger than millennials?
Yes, first Gen Z, also a first Gen Z lawmaker elected in this race. He'll be going to Congress.
You know what the Republicans would say, that in 2045 they'll be paying taxes and they might have changed their mind. That's just something that they might say.
Do you know what I know?
No one wants to go there anyway, do they?
Thank you. When we go down to see Governor DeSantis, we can stay at the Carolyn Wellness Resort, and they have a
You're all fired up about the wellness resort.
I like the one Hotel Miami.
They have a two-story climbing wall. Can you see me on a climbing wall?
I think there's more chance of you at the wellness retreat than the party hotel that AMH wants to go to.
Have you ever done a climbing wall?
I have, yeah.
Or maybe Tom at Fontainebleau.
I've never done one.
You never done, not even as a kid? You didn't?
No.
No?
Really?
Did you ever abseil? No. Okay, cool.
He's a pina colada beach. Yoga, maybe?
What is that?
He's
That's
trying
That's not what it looks like.
Is that what it looks like?
No,
What's it
it
look
doesn't
like?
look like a
Climbing
bad
is
dance.
actually all about the legs.
But what's interesting here, with the time we've got left, the fact is Florida's a boom economy. And that's really interesting that this guy won so big. Is it like the new California? I don't know.
How are you talking about 2045 when we're talking about
There's a lot of
everything that's
mathematics
going
that
on?
the
We can't get
demographics
3
of the
months
world
out.
of America shifts out somewhere in the vicinity of 2045. And the answer is, I think we're getting there faster than we ever thought.
Do you want to thank Anne-Marie?
Thank you.
Thank you, Anne-Marie.
Is she coming back in this hour?
You're like lobbying for your hotel.
I think she's going to come back, yeah.
Okay,
We're going to just discuss the midterms.
And there'll be
I
results.
hope,
There should be late
of this
morning
year.
results.
Of this year.
Not 2045.
Not like the one in. Yeah. Equity futures on the S&P down about 0.5%. This time tomorrow, we're talking about one thing, and that's CPI in the United States of America. That report comes at 8:30 Eastern time tomorrow morning, and that should dictate the sentiment until the next CPI print, which is right before the payrolls report and around the payrolls report, obviously a week after that, and right before the next Fed meeting, Tom. So just a lot packed into early December. Payroll, CPI, and then on to the Fed.
You're selling it nicely. It's true. There's a huge amount
pushing out.
moving forward. And also, the news from China dovetailed into it, and I think it's germane for a gallon of gas.
Tom, if I was writing a 23 outlook, I'd have two. The front would read, if China stays closed, and the back would read, if China reopens. And I might not offer a view on whether they do open or not.
And you could drive a truck between your estimates of what it would look like between those two.
I always say
potential
the year
outcomes.
begins in March. You find out what you were wrong about pretty quickly in the first quarter. Live from Washington, D.C., this is Bloomberg. $60 minutes away from the opening bell. State of play looks like this on the S&P 500, down 0.5%. Session lows on the S&P, just off them. On the Nasdaq, negative as well. In the FX market, euro-dollar holding on to parity, -2. Dollar strength out there, euro weakness, euro-dollar down 0.5%. Bond yields higher, Tom, at 4 or 5 basis points, kicking higher on a 10-year at 4.1699. Let's call that 4.17. So yields up, dollar stronger, equities weaker, going into the opening bell 60 minutes from now.
Going into the inflation report tomorrow, John, we've really got to underscore with the distraction of a historic midterm election. Boy, that report at 8:30 tomorrow is anticipated.
The equity market bulls need to see, they want to see, a deceleration in month-over-month inflation.
Just a tick down or more?
Just something. Give me something, and then give me a little bit more again in December, ahead of the payrolls, ahead of the Fed's meeting, after the payrolls, and tee up a Federal Reserve to have a different kind of conversation, maybe.
We'll go beneath the headline data for you on radio and television tomorrow at 8:30. We do that with the headline, the core number, and, of course, the 8 shades of core that are out there. Someone expert at this is Laura Rain, chief U.S. economist at FS Investments. Laura, I really want to drill on inflation as we've been doing politics all morning. Do you presume that disinflation is rapid and suddenly, or is there going to be a duration to our disinflationary trend?
I definitely am in the camp where I think inflation may have peaked, but boy, the descent is going to be gradual. and it's going to be far from steady. I think at the end of the day, you're looking at key components, which are now sort of the cat is out of the bag. They are significantly higher. You're seeing it across sectors. It's not just sort of one area that we can cherry pick like it was on the way up. I think maybe that's the best way to express it. On the way up, we were able to really pick out clear single drivers. On the way back down, the picture is much more uneven and much more uncertain.
Should the Federal Reserve care about rent and home ownership statistics?
100%, because that's the kind of inflation that makes people go to their bosses and say, my rent just went up 10%. I want a 10% increase. And even if that number has come down to 5%, even if it's come down to 3%, that is significantly higher than inflation and their target inflation. I think increasingly going forward, while we will still focus very heavily on the CPI numbers, we're going to start focusing on the wage numbers. That's already something everybody's watching, but there's no way to declare victory on inflation when wages are at 4 or 5%. That also is much higher than the Fed wants to see.
Laura, we were just speaking with Anne-Marie Herdern about the election, and she was saying, yes, inflation was at the forefront of people's minds, but they still have jobs. They still aren't concerned about their chances of being employed. When does that change?
So this is one of the key issues that I get all the time. How's the economy doing? And while people look at growth and feel like it's stagnant on the jobs front, we are still racing ahead on all cylinders with an incredibly strong jobs market. So I think that, the jobs market is the lagging indicator. I think the jobs market stays strong until the middle of next year. I put the economy on solid footing for the first half of next year. And I think the Fed is going to have to continue to raise rates past what markets currently anticipate is their sort of finish line, a little over 5% for the Fed. I think they may have to go further. And I think they're going to want to wait and see the labor market really break. Here's the problem. Given the last downturn, the companies are going to be more cautious about laying off workers. And, you have what the headlines in Silicon Valley right now is very different from what you're seeing across small businesses, across every business, really on a week-by-week basis in the U.S.
And we were just speaking, actually, with Neil Richardson of ADP about exactly this, that the tech companies are a very small subset. And we've been arguing about whether this is the beginning, though, of something broader, or if this really is just a specific issue to the tech sector. Where do you see the job losses broadening out in the middle of next year? How substantial will that be, given the reluctance that you just spoke about of companies to cut staff?
I think, when you look at the fact that we've lost so many of the sort of we're still hiring back a lot of the quote unquote lower productivity jobs. I think one of the problems there has been significant migration due to the pandemic. You still have localities where so many people have moved, you can't get the service jobs hired fast enough to accommodate the fact that some of these populations have really swelled. So I think that mismatch continues to keep pressure on the labor market to stay very strong.
I mentioned this in one of the recent hours, Laura. Let me do it again. In the AP exit polls, which are voluminous and really, really informative, they show this massive divide over the question, are you confident you can get the next job? And Republicans are less confident, let's call it rural, let's call it exurban, whatever you want to call it. But is there two Americas that are a job economy? And does the Fed have to react to two Americas or one America?
So, this is a critical question. First of all, the unemployment rate is low all over the place. And when I say that, obviously there's divergence in localities between the unemployment rates. But overall, it's lower than it was during the pandemic, and it's really come down significantly, matching where we were pre-pandemic. I think the real issue is that the Fed doesn't have the luxury of possibly considering two Americas. Their policies are not targeted enough. So at the end of the day, they're looking at this, broad average. And I think what they have shown that they want to do is to keep the job market strong enough so that hopefully it can over time pull some of the localities that may be struggling in line with some of the better localities. But it's hard to say if that focus on a really strong labor market's going to change. I think they've shown that it has to if they want to get on top of inflation.
And Lisa, we saw this yesterday with Welch of Vermont. If you go across Route 4 through the ski districts and all that, and if you end over in White River Junction, you ended over in a near depression 20, 30, 40 years ago. It was run down and brutal. Their unemployment rate is 2% now.
Yeah,
that's the shift.
And you've seen this pretty dramatically, but I was thinking about what Laura just said, Tom, and this idea that if you start to see the layoffs in the middle of next year, since we're in Washington, D.C. talking about politics, what does that do to shape the narrative heading into 2024?
It'll be, to me, that, and this goes to the idea of what will Biden do, what will Trump do, but it will be tick by tick by tick.
Well, but Laura,
starting November 15th.
But Laura is talking about, and Laura, I'd love your sense of this, that you don't think that the unemployment rate could rise all that much. Where do you think it's headed? Where do we need to go? What kind of pain threshold are you expecting the Fed to acknowledge in order to get inflation back to their target?
Pretty significantly higher. I think we're headed to somewhere around 5%. The Fed is notoriously bad at micromanaging where the unemployment rate goes, but just simply, we are in a different labor market than we were 20 years ago when the Fed started fine-tuning these wage Phillips curve models that they have and that they so closely link to inflation. The reality is that markets have had to, and companies have had to come to terms with the fact that you can't just flip a switch and get these employees back in the seat. And that, I think, Tom was talking about demographics earlier. I just think it's the often ignored tectonic plates that drive a lot of these factors. And I think it's one reason why it's going to cause the risk of a Fed overshoot, because they are going to continue to have to step on the brake much harder to move that unemployment rate and the labor market conditions.
Laura, thank you. Laura Rain there of FS Investments. Basically, the assessment around inflation is it's stickier on the way down than it was on the way up. And that's going to be a problem for this Fed. If you believe that inflation won't fall as quickly as it rose, then you've got a difficulty. And I'd go one step further than Laura. I think there's a lot of people out there who already believe the Fed is committed to overshooting. And there was evidence of that in the news conference with Chairman Powell a week ago.
The biggest risk to them is inflation becoming unmoored and inflation expectations becoming unmoored. They don't want to back away prematurely and get to the stop, start kind of, back and forth that people were worried about and that we saw in the 1970s. So, yeah, there's a lot of concerns about that.
This is just published, John. This is the Associated Press through the Wall Street Journal. The Associated Press just doing a phenomenal job on the mood of the country. The economy, 66% excellent 4 years ago. 43% excellent 2 years ago, 22% excellent, 1/3 of what it was 4 years ago.
All the more
Never
remarkable
have I seen this.
that we're having this conversation about the midterm results that we're having this morning, relative to the numbers that you just went through.
Yeah. I mean, it's just, and I could go on and on. We don't have the time for that right now. Plus, John, you don't want to listen to me. But other than that, if I look at white suburban women, John, let's go on and on, Lisa. 4 years ago, 4% towards Biden. 2 years ago, 5% towards the Democrats, excuse me. And this year, boom, back 7% to the Republicans.
Every single note that I've gotten this morning, the message is clear. Republicans lost. That basically, it's not clear whether the Democrats won, but the Republicans did not gain the way that they should have, based on where we are in terms of where the president, the incumbent president, is, as well as just what you're seeing in the economy.
We're going to be here through the morning on radio and television, but John, let's stop because I have to pontificate about British politics. I'm unqualified. Just your thoughts, seriously, John, your thoughts in Washington over. Lisa and I have witnessed it.
He doesn't know.
I'm serious. Lisa and I have witnessed this through our lives. What do you think of this, John?
Well, how long have I lived in America for now?
It's 4 or 5 years.
It makes sense. It's been 5 minutes. I think it's closer to 8.
you just got off the plane. So
just arrived down in DC.
How's America? Before. Yeah,
fascinating to see.
I've never seen an election like this in modern history. It's absolutely original.
I think what's interesting about this one is how it shapes the race for 24.
Yeah.
And the results we saw last night with Governor DeSantis absolutely crushing it in Florida and really pushing back against the former president, Donald Trump. There's some soul searching to be done in the Republican
Wasn't the governor
Party.
of New York threatened?
Yeah.
Kathy Hochul?
Yeah,
based on the campaigning we've seen, the president has to go up to New York. You believe there's a problem, right?
Yeah.
We thought there was a problem, and seemingly there wasn't one there.
Well, the margin was pretty narrow.
Yeah, but we were thinking about maybe a loss.
Yeah, which tells you a lot.
That's not what we're waking up to. Equities down about 0.5% from the foreigner in Washington, D.C.
Oh, give me a break.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. And there was no red wave in the Republicans in the midterm elections yesterday. The GOP had hoped to capitalize on President Biden's low approval ratings and swamp the Democrats in Congress. The Republicans appear likely to have taken the House, but with a very narrow majority. And the Senate still up for grabs. Democrats soared a big win in Pennsylvania, where John Fetterman was elected to the U.S. Senate over Republican TV celebrity Mehmet Oz. In one of the more highly contested races, J.D. Vance turned back Democrat Tim Ryan to keep an Ohio Senate seat Republican. The Georgia Senate race, well, that was too close to call. Democratic incumbent Raphael Warnock and Republican Herschel Walker may be headed toward a runoff that could decide the fate of the Senate. And North Korea has fired another ballistic missile, adding to a speculation that it may be preparing for its first nuclear test in 5 years. South Korea said the missile was launched toward waters off North Korea's east coast. Last Wednesday, Kim Jong-un's regime fired off 23 missiles, its biggest one-day barrage ever. American basketball star Brittany Griner is being moved to a Russian penal colony. That's according to her lawyers. Griner's appeal against a 9-year sentence for drug smuggling was rejected last month. The White House says it continues to follow up with Russia on ways to secure Griner's release. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What's been disturbing to me is the number of people, particularly, frankly, on the side of the House Republicans, who have said that if they don't get their way on a whole set of issues, they're going to send the country into default by not being willing to raise the debt limit.
We look set to do the debt ceiling debate stuff all over again. That was Larry Summers, the former Treasury Secretary. I'm ignoring this. Equities right now in the S&P down a third of 1%.
Tragic that we
Big conversation this morning about cuts at Meta. 11,000 people going at Meta from the workforce. Just big cuts. And Redfin. Let's talk about housing. Bramo, Redfin laying off 13% of staff.
Well, yeah, I mean, Redfin, okay, they had this home flipping business that they're now shutting down, where they basically used algorithms to determine the wealth, the worth of a home, and things have moved a little too quickly away from them, and like they have inventory. I believe so. I'm going to get the details so that I can make sure that I lay it out correctly, but the fact that they're cutting 13% of their staff after already having cuts, after already cutting forecasts, right? I mean, this idea, where do we end? How much is this broadening out? Because this is not just a tech company, it's the housing market. We're expecting to hear something from Disney and the entertainment business. How much is this going to be a theme?
I don't buy the idea that we can manage a change from a 3% mortgage to a 7% mortgage.
No.
That's a human condition for each family.
So how does the 2023 Investor Committee meeting start? It starts for me with a simple question I've asked it over the last couple of weeks. So we've had rates go up 400 basis points in 8 months. The excess out there needs to be unwound. Is it 2 years worth of excess or a decade's worth of excess? Which one is it?
They're hoping it's 2 years.
They're hoping it's 2 years.
Hopium out there.
The call on the duration and depth of the downturn, particularly the depth of the downturn, is basically a call that we haven't built up excess in the last 2 years.
Is Governor Bailey onto something, modeling a 2-year recession? That
Potentially.
is an outlier, but maybe he looks like a genius.
Well, let's take the midterm results, and we haven't got them in full yet. I think most people assume on the margin gridlock. Let's go with that just for a moment. If you believe monetary policy doesn't respond to the next downturn because they're objectively, it's an objective trying to engineer a downturn, so monetary policy is off the table. If you believe that fiscal policy is constrained, shouldn't we be having a different conversation about the duration of the downturn?
I agree.
Because if I don't know where the counter-cyclical circuit breakers coming from?
When we get back to New York, we can do this.
It raises questions.
A lot about the x-axis of all these discussions, including the political discussions of the moment. Right now, we're going to get on the x-axis of the Walt Disney Company. Geetha Ranganathan joins us, expert at Disney, U.S. media analyst for Bloomberg Intelligence. Quickly here, Geetha, what was the distinctive point as Disney manages the collapse of streaming profitability? I saw Warner Brothers Discovery tip under $10 per share. They're out to 67% debt now, I believe. Disney's doing better, but how much better?
Yeah, Disney is definitely doing better, but that better is just not good enough, Tom. So, we did have streaming losses that came in at $4 billion for fiscal 2022. And yes, they did promise that there will be improvement. But remember, the guidance that they've issued for 2023 came in well below expectations. So there's just no way to sugarcoat this. This is going to be an extremely difficult fiscal 2023 for the Walt Disney Company.
Reducing inefficiencies or basically trying to streamline costs, what is the job-cutting kind of picture you're expecting from Disney?
So they didn't talk too much about job cutting itself. In terms of streaming profitability, what they really are looking to do is, first of all, improve the top line growth. And they're going to be able to do that with a 38%, increase in their prices, as well as a new advertising tier. But they're also really looking to kind of rationalize marketing expenses. And that's where really a lot of the cost cutting is going to come, apart from, of course, optimization of their content expenses, which are going to be roughly about $32 billion for the next few years.
Remember when we were talking about content being king, Geetha? I mean, this idea of how much are we retrenching what the norm is or what it has been over the past 6, 7, 8 years when Netflix was sucking up all of the content. How much are we going to see a reversal of that?
I don't think we're necessarily going to see a reversal. I mean, these companies still need to spend big on content if they need to attract and retain subscribers. What we're going to see, though, is they're going to be very selective in choosing projects. So previously we had Netflix kind of go after everything and see kind of, okay, what sticks and, just take these wild swings. I think now they have gathered enough data to see what exactly their audience wants. So they're going to be just much more disciplined about it.
What does it mean, Geetha, for the creative process in Hollywood? Do they go into recession? Do they ignore this? And I'm using this almost in a global sense, how does Hollywood react to what's happening at Disney?
Yeah, it's definitely going to be a tough environment. I mean, obviously, content is we're still going to see about $150 billion spent on content in fiscal 2023. So there's still a lot of money out there. But at the same time, we're not seeing these companies kind of greenlight all projects. So there is definitely that sense of, some amount of discipline. They are being pretty selective. And I think we're going to see that kind of come into Hollywood also. Having said that, though, there is one point that I would like to make. We're seeing a lot of profitability pressures in the streaming business and the linear TV business, but the studio business actually has done really, really well. And so I think the one positive that's coming out of this is that most studios are now going to go for that theatrical release. There was this big debate about whether they should go direct to streaming. I think most of them are realizing that the theatrical window actually does give them good profits, and we've kind of seen that across the board in 3Q results.
Geetha Ranganathan, as always, thank you. US media analyst for Bloomberg Intelligence. Disney this year down 35%. That's before the losses in the pre-market. Netflix down by 56%, Tom, year to date.
It's profitability to me. It's been my religion, and I just don't understand the business. Maybe I'm a fossil that, I'm waiting to watch Cinerama and Julie Andrews and all that from a million years ago. But the modern cinema business, John, I don't get it. You said you've seen Top Gun 5 times?
Sure.
Are you the foundation?
Well, you know what the modern
business?
cinema business is. No one takes a risk with original movies anymore. They just do the
Reuse.
Avengers Volume 50.
Yeah, readers.
Because you don't have to risk the costs around the marketing. You just say there's a new Avengers coming out.
Guys.
And then it grosses 500 whatever. million.
Yeah, I don't know. I just don't get it.
I'm with you.
You accuse me of being bearish, and both of you are basically saying, why do people even have entertainment these days? Look, I think that, first of all, about the movie theater business, movies have actually done well, to John's point yesterday. And Geetha just there was saying that actually big studios are doing well because they get money when they release these films. People want to go to the theaters. And, they want to see it.
John's point, you look at Julia Roberts and Cary Grant, they're going to redo another movie.
They are, yeah.
There's no question about it.
Without a doubt.
Yeah.
Tom Cruise is going to be like 80, making Top Gun. It's going to be great. I remember my favourite fixed income columnist for a long time, and she stopped writing it. I don't know why, because I used to enjoy it when she did. She used to write about content and the cost of content and the credit markets and how there's cheap available credit for these guys to go out and spend lots of money on content was just available, and that was the business model. And I wonder how much that changes. She should start writing again.
Was this fun?
I used to enjoy that.
We should do this more often.
I don't know. She sounds like a total bozo.
She was awesome.
Now she's
awesome.
a total sellout.
We should do this again.
What, in 2 years?
Washington, every 10 days.
Okay. And in 2045? You want to do it then too?
2045.
Okay.